All right, chat. Today we have PPI inflation data. What's up, Dominique? Sorry, I'm getting my screen up here. Bear with me 1 second. What's up, Slide Pawn? Apple's ripping up. Google's ripping up. Nvidia is still over 900, which is good. AMD is still sitting tight here. Hold on, let me pull the rest of this. All right, let's see what we get. But yeah, PPI inflation data today. We'll see if it helps or hurts the market, really. What's up, IV? Joseph, Beach. All right, 0.3% is what PPI is expected. We also have jobless claims and retail sales. All right, guys. Apple up a lot today. It dipped a little bit yesterday at the open, rebounded some this morning. Tesla's, struggling. I might add a little bit to my Tesla trade. It's a small trade. I'm just waiting for my coffee to cool down so I can drink it. But good morning, team. Hope you guys are doing great today. It's early. Again, we got PPI inflation data dropping soon. All right, 0.3%. Is what is expected for PPI data. I'm trying to put this up so I can put the expectations up. What's retail sales? So retail sales are expected at 0.8%, 0.8%. Jobless claims expected at 216. Put that up so you guys can read it. What's up, Sarge, Ro, Jim, Jay, Beach, Aaron, IV, Joseph, Slide, Dominic. All right. Yeah, I mean, I always start the stream right around the same, I'm always starting the stream right around this time. Yeah, I hold a little bit. It's not the end of the world. Like, Tesla's so volatile. It's one of those things where, like, I buy a little bit of it because I believe in full self-driving more than anything, right? Like, I believe in FSD, and I think FSD is gonna be big into the future. I just don't know when. And so I got some shares so I could capitalize on that, you know. But, you know, regardless of what happens, it's relatively small. It's not like I'm risking my life savings here on it. I don't risk my life savings on any stock. I don't think that's smart, you know. So, hope that makes sense. Oh, man. We'll do a poll here live. All right, so we got the poll just today. Does today's PPI coming higher or lower than the 0.3% expected? Do we have earnings today? We got Dollar General, Dick's Sporting Goods, Build-A-Bear. A couple small companies dropping earnings this morning. Nothing big, though. Dollar General. This evening we have Adobe. That might be interesting for AI and stuff. Oh man. Alright. What do we have next week for earnings? The only big one is next Wednesday. We have MU. We're probably not going to cover it, though. Sundial. NU, we got Nike and Lululemon next week. FedEx. Thursday. Love it. I try to sleep 7. I try to sleep 7 hours normally. If I get 7 hours, I'm pretty good. If I get 7, I'm happy. If I get less than 7, I'm not. Yeah, it depends on what time I fall asleep. All right, chat. So we made a little bit of money yesterday on our funded accounts. I'm pretty sure. Oh man, all right. I I gotta yawn. I gotta wait for my coffee to cool down more to drink it. But yeah, so far you can see Apple gapping up a little bit. It's at 172.50s, Google at 141.80s, Nvidia at 904s. Yeah, so far, funded account wise, yeah. Wait, what? Okay, never mind. Got you. Okay, so yeah, so funded account wise, on my 300K combine, I'm up about 150. On another funded account, I'm up about 230. On another one, I'm down about 200. So on another one, I should almost be funded. Let me see, that's number 24. I have to go check that one. All right, chat. Bull trend is strong until it breaks. The trend continues. $5.30 is my take profit. What's up? Not really. Look at the chart. The pullbacks are high or lows. Yeah, Nvidia's I think what you want to watch. You know, here's a 10-day chart for Nvidia. It's still pretty strong, honestly. Like, you know, people tend to sensationalize things. The reality is, pullbacks are healthy to a certain extent, and I don't think this pullback's the end of the world. Like, when this happened on Nvidia, a lot of people were like, "Oh, it's the end of the world. Let's, you know, it's time." But yeah, we just never really struggled from that dip. We bounced right back. We're right back towards highs. I think if you put a daily chart up, you can kind of see the trend a little bit easier on Nvidia, which is just the same trend that we've been in. You know, I don't know when it's gonna break out of that trend or what, but hey, thank you, KD. Gotta take another look. But how many times do you think we break highs and what? The Nasdaq, Tesla, Apple, Nvidia. What symbol? I'm assuming you mean Nvidia, but all right, Chad. So yeah, so again, today we got a bunch of stuff dropping at 8:30. We got retail sales, jobless claims numbers, we got PPI inflation data. Outside of that stuff, tomorrow is triple witching day. So tomorrow's a day of historical volatility and stuff like that. So that'll be interesting to see what happens here. Yeah. Weight Watchers. I mean, I think Weight Watchers is in trouble. The reason I think Weight Watchers is in trouble is because competition has grown for them. You know, over the last 10, 15 years, competition is high. And so, you know, I think if you look at them, they've really been in a long-term downtrend since 2018. Do you think Palantir will have positive earnings? When's earnings for Palantir? It's relevant to me because I'm in it. Palantir doesn't have earnings until May. The last time they dropped earnings was in February. So yeah, we literally got months until Palantir releases earnings. But maybe, I don't know. What is tomorrow? Why volatility? Tomorrow is triple witching day. It's a day where all three major contract types, including stock index futures, or stock options, index options, and index futures, all expire tomorrow. So it's typically we get volatility, but not always. I mean, it's just a really well-known market day. If the report is high, what effect does it have on? Well, generally inflation data, lower is better, higher is worse. But again, PPI is a little bit different, to be honest. So PPI is a little bit different than that, you know, so I don't know. We'll see. You know, PPI is one of those reports that, yeah, it's just a little bit different. Oprah got out of Weight Watchers and it dropped almost 30%. Was she a holder of the stock, or was she an executive in the company? I don't know anything about it. I'm trying to gain weight, not lose weight. Google at 142s right now, so you love to see that. Apple up too. Yeah, PPI is expected at 0.3%. Retail sales expected at 0.8%. Jobless claims expected at 216,000. She was a promoter of it. Do you think she's going to create her own competitor of it? Yeah, so she departed from the board. This came out about 2 weeks ago. Oprah Winfrey is set to depart from the board of Weight Watchers. Nearly a decade amid the diet company's waning profits and public support, Weight Watchers International announced on Wednesday that she decided not to stand for re-election as its next shareholder meeting in May. She owned 1.13 million shares in them, according to Reuters. She said, quote, "I look forward to continuing to advise and collaborate with them and CEO Simi Sistani in elevating the conversation around recognizing obesity as a chronic condition, working to reduce stigma, and advocating for health equity." Yeah, I mean, she probably just got out because it's a bad stock. You know, like realistically, like this stock looks rough. This stock, again, like 7 years ago, Weight Watchers was $105 a share. Now it's $2.30, $2.20. I'm sorry, hit $2 almost even last night. So yeah, again, the reason people are saying Weight Watchers is in trouble is because of the weight loss drugs, Ozempic and the other weight loss drugs, which help manage blood sugar and boost weight loss, have soared in popularity lately, and that's bad for a lot of these other, like, more conventional weight loss brands like Weight Watchers. Yeah, so Oprah came under scrutiny after revealing in 3 months ago that she has been using some of those weight loss drugs like Ozempic to lose and maintain weight. She said, quote, "The drug, quote, feels like a relief, like redemption, like a gift." Yeah, I got out of Boeing too. Where's Boeing? I mean, I don't even want to look at it because I did get out of it, but it still looks like it was a good move because I got out of it and it dumped. And so, man, whew, we got out of it. We got out of it and we saved some money. You know. People should just lose. Yeah, I mean, I understand why you might feel that way, but I think you have to understand, like, sometimes it's not that easy, brother. You know, and this is coming from somebody like, look, I'm in good health, man. Like, I'm like 170 pounds. I'm like 5'11", 170 pounds. I'm like perfect weight, you know, and I'm in good shape too. Like, I do jujitsu and stuff, so like I'm pretty athletic as a person. So, like, I don't need that stuff, I guess is my point, obviously. But I don't think we can discount that some people do, and some, like, I'm sure it's not as easy as we think, you know? But yeah, but it's super nuanced, you know? Like, I'm not blindly a supporter of it. I think there's risks to that type of stuff as well, but yeah. What's up, Mark? Yeah, I got into Boeing around 200s, got out at like right around there. All right, so let's look at our poll here, guys. 76% think higher. 76% think higher. 24% think lower. PPI is 8:30 Eastern Standard Time. SOUN, man. Like, we bought SOUN after earnings, and it's been moving up. Like, we're green on it. So SOUN, Soundhound, has been flying up, and again, we're in it right now. Here's SOUN. Look at like a daily chart. Look at how powerful this is. So SOUN, Soundhound, we bought the dip, and it worked. Yeah, we got in Soundhound at 722. 722 is at 865. Really nice percentage gains there. Nike. I'm in Nike. I've been in it though. I haven't really sold it. I'm red on it. My average price is 104s. It's at 102 roughly. So I mean, we're mostly flat. It's not a huge loss or anything. I'm green on the day, green on the portfolio overall. My best trades are right now Home Depot, Microsoft. Again, we got a Microsoft average price of 312s. It's at almost 420. We got in Pfizer. Or no, we got in Oracle at 99. It's at 126. We got in Palantir at 19s. Really at 16s. It's at 25s. We got in PayPal at 51s. It's at 63s. We got in Snapchat at 10s. It's at 12. We got in Snow at 170s. It's at 164. So we're down a little bit there. SoFi, we're down a little bit. SOUN, again, we got in at 7s. It's at 930s. Tesla, we got in at 180. 180s. It's at 160s. So down there. But it's not a huge trade. Tyson Foods, we're in that one at 51s. It's at 56s. Unity, we're flat. Walgreens, we're flat. Walmart, we're green. We got in. It won't tell me where I got in because it was a split. But we're very green in Walmart too. ExxonMobil, we got in at 97s. It's at 110s. ARM, we got in on IPO day at 63.50s. It's at 131s. One of the better percentage trades. Alibaba, we got in that one at 72s. It's at 75s. Citigroup, we got in at 42. It's at 58. Chewy, we got in at 16s. It's at 18. Delta, we got in at 39s. It's at 43. It's almost 44s. Disney, we got in at 90. It's at 112s. Etsy at 83. It's at 69. So we're down on Etsy. We're down like $60 though. It's a pretty small trade. Ford, we got in at 11s. It's at 12s. Google, we got in at 130s. It's at 140s. Coca-Cola, we got in at 52s. It's at 61. Honeywell, we got in at 180s. It's at almost 200. MGM got in at 39s. It's at 43 roughly. And so yeah, we're doing pretty good. That's our portfolio. Like we're doing pretty good. We're green in almost everything. Like we're red. I think about we're red in maybe 25% of the positions. But hey, nice Daniel. It knows, bro. It knows. Are you primarily a swing trader now? I mean, I'm not primarily anything. I do a little bit of everything. I day trade every day. You know. I don't think I'm better than anybody, JB. I mean, I'm the top 3 greatest of all time in the world right now. But, like, I'm not better than anybody, bro. Where's crypto at? Bitcoin at 73.50s. Apple pulling back a little bit. Yeah, definitely top 3. Have you tried the Apex copier? No, how do you get it on Quant Tower? I'd try it. No, I haven't updated. Well, so you get the 80% off regardless, but I have to update Nightbot in that way. Hold on. Okay. Yeah, I just updated it. Yeah, Apex right now. Apex right now has 80% off. 80% off, and the 1-day pass is back, chat. So 80% off and the 1-day pass is back. The 1-day pass is back, so you get funded next. There's the link. Check it out if you want to help support your boy here on the channel. Oh wait, Pawn just posted it, but it's all right. Here, let me delete mine. It's cool. It's cool. Yeah, check out the Nightbot. Posted the link. Again, just use my promo code if you want the max discount. It's BT, beginner trading BT. Always remember though, guys, I'm terrible at this stuff. Have no idea what I'm talking about. Understand rule CFTC, rule 4.41, all that good stuff. Don't sue me, basically. You know. But yeah, SOUN. You love to see it. No, all good, brother. I've met people. I've met people in real life that were like, "Hey, you're John from Beginner Trading," you know. I've also had other people. Yeah, I've met people. Well, I think lawyers are in trouble with AI, bro. AI has gotten crazy good, dude. Crazy freaking good. Yeah, I'm pretty protected. I mean, they can try to sue me, but they're not going to win, you know? Like, I literally tell everybody I have no idea what I'm talking about. Like, people say, "Hey, John, what's going to happen to this? What's this going to do? Should I do this? Should I do that? Should I buy this? Should I buy gold?" My answer is always the same. I'm very strict with it. I have no idea what you should do. Don't copy me. I'm not a, you know, like, all right, so look, I'm asking Chat GPT about this, right? So I asked it. I said, historically, does the market react well on average to higher or lower PPI data stock market wise? They said it's complex, is what GPT said. And again, this is actually very true. Coming from somebody that covers this every freaking month, it's very true. It's incredibly complex. What we mean by that is that higher PPI data generally indicates increasing prices at the producer level, which can be a sign of inflation. In a moderate amount, this can be viewed positively as it suggests economic growth. However, if PPI is too high or rapid, it can signal excessive inflation, leading to concerns that central banks like the Fed will raise interest rates to combat it. Higher interest rates can reduce spending and business investment, potentially leading to slower economic growth or even a recession. Therefore, if the market perceives the PPI increase as a sign of problematic inflation, stock prices may fall. Lower PPI data, on the other hand, indicates a decrease in prices at the producer level, which could be a sign of weak demand. This can be viewed negatively as it suggests economic slowdown or deflationary pressures. However, if the economy is overheating or if inflation has been a significant concern, a lower PPI might be welcome because it suggests inflationary pressures are easing. Ugh. Hey, honestly, ChatGPT hit the nail on the head, man. That's exactly right. Exactly right. Super nuanced, but generally, if inflation is a fearing thing, higher is worse, lower is better. But it's not always like that. And again, I cover PPI every month. It's not always like that. Sometimes high PPI makes the market rip. You know, you just never really know, I guess. Courtney Smith says, word of advice, stay away from penny stocks. Unless you are day trading it. Shake my head. Fisker let me down bad. Do you know anything of the company? Do you think they are going bust? Yeah, I mean, listen. You're preaching to the choir here. Like, listen, I've been there. Like, I've invested and traded at penny stocks and I've lost money. Like, almost everybody does. It's mostly like a retail, like a newer retail traders thing where they get involved with penny stocks. Cause like, I think when you first get interested into the market, it becomes like, ooh, I can create something from nothing, right? And I think penny stocks embody that really well, where you can create something from nothing. The problem is that the odds are so stacked against you in penny stocks that almost all of them are going to fail. They're super like misleading marketing out there for them, so they'll really mislead shareholders into thinking they're like the next Apple or Amazon, or for Fisker, like they're the next Tesla. That's the problem with most penny stocks, is that they're almost all going to fail. Even day trading them is probably not a good idea, right? But on the other hand, it's also a very new EV company, and these new EV companies simply don't have the consumer base to succeed in a lot of ways. They just don't have enough people actually interested in buying them. And so I think there's risks on both sides outside of being a penny stock. Fisker in general is at risk, because you got to think about, like, take yourself outside of the stock market. If you wanted to buy an EV, you're not going to buy a Fisker. You know, you're not going to buy a Mullen. You know what I mean? Like, you're not going to buy a Lucid probably. You're almost certainly going to buy a Tesla, or you're going to buy one of the legacy EVs, like a Porsche or you know, Toyota's EV or Honda's EV or Ford's EV. You're probably not going to buy a very new brand, because there's incredible risks for doing so. And I think most people understand that, and like, that's going to be bad for a lot of these smaller EV companies, because they just don't have the consumer base they need, the production base they need to succeed. Margins aren't great either for EVs. So, yeah, you look and see Microsoft came from a penny stock. I mean, not really. Most successful companies start off as, they IPO and they're immediately not penny stocks. Like they IPO and they're mid caps, or they're immediately large caps if it's a big enough company. So most successful companies, like, you know, they don't start off as penny stocks. You know, like, you also have to understand the difference between a penny stock in 1986, when Microsoft IPO'd, versus a penny stock today. You know, like you got to understand, pennies back then were worth a lot more in 1986 than they are now. So like, you know, you hear a very common saying with penny stock investors that, oh, most big stocks start off at penny stocks. Look, and I want you to understand this. Look, so Microsoft has been split, Courtney. And so Microsoft IPO'd March 13th, 1986 at $21 a share. At $21 a share. Again, exactly like I just said, Microsoft was never a penny stock. The reason it looks like that is because it's been split. So they adjust historical prices to compensate for the split, right? But it was never, Microsoft, again, an easy example, was never a penny stock. And so if you're investing in a penny stock, most of these are terrible companies. Like, most of these are companies that can't make it with the big boys. They got to try to trick shareholders into sitting on them. But they're just not good. Oh, no, I understand. But what I'm trying to say, I guess, is that it's not most of them. Like, you might look back and see that some might have started off as penny stocks. The true answer is that a lot of them split. Successful companies split when they get over a certain price. And so that makes it look like they were cheaper when they IPO'd than they really were. Again, Microsoft, if you look at the IPO date for Microsoft, it says 9 cents a share, right? But their true IPO price was 21 cents. It's just been split so much since then. Anyways. Coming from the auto industry, the competition is insane. Yeah, for sure. All right, guys, PPI inflation data. Let me get my timer up here. SOUN spiking up some more. All right, so we got hour and a half until PPI inflation, retail sales, and jobless claims numbers. What's up? Yeah, all good, Courtney. I'm not trying to argue or anything. I understand. Like, I've been there. Like, I really do. Like, I get it. Like, I think young investors, and I'm not talking about like literally young. I'm just talking about like newer investors who are. And I'm not saying you're new either. I don't know how much experience you have. I guess my point is like, there's so much edge that you can find trading small size in blue chip companies. Like, as an example of this, I'm holding what am I holding? I talked about this the other day. I'm holding let me see. I'm holding one share of ARM, which was an IPO. It IPO'd at $63 right into a mid-cap, large-cap territory, and I've made hundreds of dollars from that one, or from my positions in ARM. I had much more than that. You could buy a couple shares of a lot of these stocks and have really good investments and swing trades from them that bring really good percentage returns. Like, you really can't. Like, you could buy one share of Microsoft and be up hundreds. You could buy, like, especially right now. So there's opportunity you can find trading healthy companies. Like, if you start to bet against the largest companies in the world, or if you start to, try to invest in penny stocks, almost everybody the reality is, I try to explain it every day, and it's all love here. Like, it's all good. Like, I understand. Like, I really do. If you invest into 10 random penny stocks, almost all of them are going to fail, right? The likelihood that you're going to be up in that portfolio is going to be very, very low. If you invest into 10 random blue chip stocks, the likelihood that you're going to be up in that portfolio over a few years' time is very, very high. That's the difference. And so even if you have a small account, even if you have to trade small size, there's still big returns that you can make with small size and larger cap stocks. But everybody's different. I'm sure there's some people that can make money investing in penny stocks. It's just not me. It's not most people either, I think. But all right, Google up the 142s. Out of all Tesla's competitors, do you think Rivian looks like a buy? I don't know. I think there's risks for Rivian, just like there's risks in Fisker. I think Rivian's positioned itself a little bit better, and I think it's also really extended on the downside. I also see Rivian trucks being driven around in my area, and I like them, and they're quick, and Rivian, there's a couple of good things I like about Rivian. It's established a niche, right? So it's separated itself. Like, the problem with a lot of like Fisker or Lucid or Neo is that a lot of them just try to copy Tesla. Like, the cars look like Tesla. And when it comes to that, people are just going to buy a Tesla, especially if the price is similar. Rivian has done the smart thing and made themselves different from Tesla. They're mostly producing trucks. The trucks are really good looking. I like the trucks. They're fast. They're really cool trucks, and they're also producing them. They also have big backing by Amazon and stuff, but there's also tons of risks as well in this, right? So it's just kind of high risk, high reward for Rivian. I think they're positioned better than a lot of other up-and-coming EV brands, but I don't know, even with that, I don't know if they're necessarily safe in that way. I don't know if they're safe. I think they're still risky. What is the advice you should give for new traders? Should I buy a course? I mean, no. I wouldn't. Most courses are publicly available content you can find for free. The internet is such a vast place that you can find so much stuff. You don't really need to buy a course, especially not like the way the courses get you is that they make you think that you're going to get so rich if you buy the course that you can justify spending thousands of dollars on the course, right? I'm here to tell you, you're not going to. You're going to regret it in your mind. You might pretend you liked it and pretend it was so great so you could kind of confirmation bias it up. But the reality is, like, you're going to deep down regret buying a course if you do, most of the time. Like, most of the content you can find for free out there on the internet somewhere, you know? I don't really have a prediction for PPI. I don't really know what it's going to do. Nobody knows what the data is going to do. Lower's probably better. Higher's probably worse. But, I mean, either one could happen. I'm not sure. But I'm not also against courses. Like, I understand, like, people got to make their money. Like, sell your courses if you want, as long as it's reasonable. Just don't try to charge people $5,000 for a mentorship program. That's just sleazy, you know. All right, chat. I'm looking at Google's up. Apple's finally dipping down. SOUN is up. Nvidia pulling back down under 900s. Let's see if it can break back over that level. Nvidia's a big influence in markets right now, to be honest. We're trying to look at some other stuff to see what we get, but yeah. PPI data dropping in about an hour and a half. I'm in Soundhound. I hope it goes up. I'd rather pay for a seminar. There's not much difference. Yeah, the problem is that it's confirmation bias. Like I said, man, like I wish there was a course that taught me how to win the lottery every day. Right? Like, I'm desperate to believe that. I want that to be true. You know? John's lottery course coming soon. But no, I wish that was true. Right? And so, I'm sure if somebody packaged a course like that and then put it out there, some people would buy it because they're so desperate to believe that's true that they're going to ignore the red flags. They're going to ignore the red flags in it. Same thing goes for most of these courses, right? Like, day traders are probably going to lose in the beginning, regardless of what course they take, who they follow, what mentor they have, all of that stuff. You're still probably going to lose in the beginning because you have to lose in the beginning to a certain extent. Almost all day traders lose, right? It doesn't matter what course you take, who you follow, who's your mentor, you're probably going to lose in the beginning. And the people selling courses, they can pretend it's not like that, but everybody that's really day traded understands that for the most part. The only people that don't understand that are the really new ones, right? The really new ones, and that's their prime target. And so they tell those really new guys that, hey, you're gonna get rich. Just buy my course. You could turn $1,000 into $500K in a week. Just buy my course. They tell them whatever they gotta tell them, and they buy it. They eat it up, you know. And then again, a lot of them, they know they got scammed, but they're so desperate to believe it that they start telling everybody, oh, it's the greatest course of all time ever in the world. They start telling other people because misery loves company, right? So they're going to start trying to drag other people into buying a course because it's so hard for them to look inside and be like, yo, I got scammed. That is very common. You see a lot with like multi-level marketing. You see it a lot with penny stock day trading courses, unfortunately. But in the end, most day traders lose money, and you almost have to lose money in the beginning. It's called market tuition. Like, to have risk management skills, like to have skills in risk management, you almost have to lose so that you remember how much it sucks, you know, so that the next time you're taking a trade, you're like, yo, it sucked to lose all that money. Let me try to avoid that now. And then boom, you're developing risk management. So it's almost necessary. Not to lead to a shameless plug here, but Apex right now has 80% off their accounts. Apex, what Apex is useful for day traders, because it's relevant to what we're talking about. Day traders lose money. Again, the overarching points, day traders lose money. Now, you can either put up thousands of dollars yourself and risk that and, again, probably lose it while you're learning how to day trade, or you can go the smart route and try a funded account program. You're still probably going to lose because most day traders lose. It doesn't matter where they trade. Most day traders lose. But on Apex, you can get a 25K combine for like $30 right now. You can get a $300,000 combine or challenge for like $200, right? So on Apex right now, you can get them anywhere between like $30 and $200. And if you lose, you're only out $30 to $200. If you're good enough to pass it, they're going to give you a demo. They're going to test your skill. If you could pass the test, the base one, I think you got to make $1,500 in profit without losing a certain amount and following their rules. And if you pass it, you get 25 grand in funding with a 90% split. Tons of great resources, and the good thing is that it's the best of both worlds. If you lose, you're only out at the base when you're out $30. You know, it's much less risk. It's still teaching you how to trade under pressure, but if you're good enough to pass it, you get a 90% split anyway. So it's, in my opinion, it's the best of both worlds. Limited risk. It teaches you how to trade under pressure, and just taking it builds skill in trading. It teaches you how to trade. But if you lose, it's not the end of the world either. It's not like putting up 5 grand and losing that, which is noticeably, more detrimental for the person. And so again, they are a sponsor of mine though. Of course, I'm biased because they pay me money, but I genuinely think it's useful for traders. And I lost thousands when I first got started trading, and I wish I had something like this in the beginning. So if you want to check out that link, you can. But again, understand, most day traders lose. I'm not hiding that. I think this is a way to limit those losses in the beginning, Top 3 courses in the world right now. Thank you for not being one of those people that constantly try to get money out of us. I mean, listen, I have sponsors I plug regularly. But I mean, y'all have to understand, like, I'm here to make money just like anybody else. But I provide a service, and I would like to sleep good at night. And so I'd rather just be honest with people. I could be honest with people and still make money on the back end. And that's kind of my business strategy here, is just be real with people. But I don't claim to be an expert or even a good trader or anything like that. I just try to teach people what I wish I had and what I wish I knew in the beginning. Yeah, core retail sales important. Yeah, if you do use Apex, though, just remember my promo code BT. Get you the max discount. BT, beginner trading. BT. Get you that max discount. Appreciate the love, guys. We're also back to the 1-day pass, too. So instead of taking 3 days to pass the challenge like the previous one did, now you can pass it in 1 day. Yeah, I got funded in a 300,000 one the other day, and so that's what we've been trading on lately. I don't know about core retail sales. Core retail sales expected at let me see. Core retail sales expected at 0.5%. Jobless claims expected at 218. Retail sales expected at 0.8. PPI expected at 0.3. A lot of economic reports dropping today, though. Really busy, to be honest. It's a really busy time. Guy on TT was telling me, yeah, you got a lot of young people that, like, they're just trying to get seen, right? Like, I heard one that was like, hey, all you got to do is make 5% a day, right? Just make 5% a day, guys. Listen, 5% a day, you're going to be rich. Just make 5% a day. It's like, okay. What they don't understand is, like, the elite of the elite in trading, in investing, I should say. The elite of the elite make 25% a year, But yeah, just make 5% a day, chat. Listen, easy, piece of cake, 5% a day. Like a lot of them just don't really. This is what happens. All right, this is what truly happens. people get involved with these different industries like trading and stocks or whatever it is, but they don't really understand it. They don't know about it. They don't really understand it. They don't really get it, and they don't really understand what's a reasonable expectation and what's not from these markets. Because again, these guys are new too, right? The people posting these videos are new. And so what they end up doing is they think something sounds reasonable in their head because, again, they're new. They don't understand what the real expectations are with this type of stuff. And so then they end up just coming up with these things saying, oh, yeah, this makes sense. And they put out these videos and they just become laughing stocks because, but again, the problem is that some people actually believe it. Like some people actually believe you can consistently make 5% a day in markets like easily, and you're just not going to. Again, if you got a system that can make 5% daily, Goldman Sachs, call them up. They'll buy that system from you or hire you for millions and millions of dollars, probably more, billions maybe. If you can make 5% daily, dude, Goldman Sachs will buy that from you in a heartbeat, man. But again, that's what they don't understand. Like if there was really something like that, Goldman Sachs would be knocking on your door. The fact that you don't got a lot of people working at Goldman Sachs from YouTube, it's because most of them are full of crap, Google at 142s. Yeah, good luck, Lo-Fi. Hope you get that. Hope it goes well, brother. I mean, $1,000 a day is pretty easy to start to I mean, let me clarify. It's not easy, but you can make $1,000 a day. Passive income is not easy. To make $1,000 a day in passive income, you either have to have dividends, you have to even rental properties are not easy. So I mean, it just depends. I'm in SoFi right now. Yeah, I'm down on it. Yeah, it depends on where you look. 216. You can look other places. They're going to have other expectations. The expectations are from the banks. So they're going to vary. So some I'm showing 216. This from the week of March 8th. Others are showing 218. It varies. %5 does not sound like a big number. I know that's what really gets people though, right? Like that's what gets people is that they say, oh, 5% doesn't sound like that hard. 5% is so difficult to make in stocks. I mean, not over a long period of time, but over a short period of time, sure. Like making it every day is so difficult to do consistently. Like you're gonna end up, the more you try to make per day. Here's the reality, guys. The more you try to make per day, the more you're risking. So like, the more you try to make, the more you risk. And so you could try to make 5% a day, and you might get away with it for a couple days. But after doing that a few times, the risk that you're taking is going to be so profound that like you might make money, lose your whole account. Because again, to keep making that money, you're going to have to keep taking larger and larger risks. Eventually, the check's going to come and your whole account's going to be gone. And I say this a lot, but it's true. It's kind of like the martingale roulette strategy. If anybody knows what that is, thank you, Servant. I appreciate it, brother. Thank you, man. But it's kind of like the martingale roulette strategy, where you double your size until you win. And you got to lose like 6 times in a row to actually lose. And so for people that don't understand statistics, they might think, oh, well, you're never going to lose 6 times in a row. You will. And when you do lose, you're going to lose everything you made plus more. That's why it doesn't work, right? Same reason this doesn't work. And so a lot of people are just averaging down until they win, and they're taking larger and larger risks every day until they win. And again, it might work for a little while. Eventually, it's not going to work. And eventually, when it doesn't work and you get unlucky, you're going to lose everything. And so that's why it doesn't work. I'm up 975 in the last year. That's pretty good. I mean, 10% is solid. But yeah, 10% is pretty good. I mean, it's not bad. Your expectations are supported for the US dollar. I mean, for the dollar going up means market's probably going down and vice versa. They usually have a positive correlation. Or inverse correlation, I mean. So it just depends, to be honest. It really does. It just depends. In my opinion, paper trade. Yeah, trade prop firms. Try to pass prop firms and limit your risk. Again, on Apex, like I said, guys, I'm not trying to. I mean, they're a sponsor, so of course, but if you look at this, right, right now with this discount, it's 80% off. Right now, you can get a 25K challenge on Apex. Right now, you get a 25K challenge in a 1-day pass. So you can pass it in 1 day. You don't have to wait 3 days. Right now, you can pass it in 1 day. For $29.40, so $30, you get the base one. So for $30, you can potentially try to get 25 grand in funding. And again, if you lose, you're only out $30. That's the value of this thing. It makes sense, guys. It makes sense. I know it might seem like I'm just plugging a sponsor, and I am. I mean, to be fair, I am. Shameless plug. But I truly think it's good for traders. It limits your risk in day trading. And in futures, you can day trade the SPY. You can day trade the Q price action in what's called the S&P E-mini, the Nasdaq E-mini. You can day trade the same price action. Liquidity's better, and most pro day traders trade futures because there's no PDT rule. You can day trade, buy market, sell market, all that good stuff. And we're going to trade on there today too. But yeah. Just remember, use my promo code BT. It'll get you the max discount. And yeah, we're going to get ready to trade. We made some money yesterday. And again, the way you also get rid of risk, right? If you do want to take high risks in day trading, it's very simple what you should do. And I've been preaching this for years. It's very true. If you want to take high risks in day trading, what you do is you build up a cushion on the day first. Trade small, trade micros if you're in futures. The reason Apex is the best is because you can trade micros. I can buy 40 contracts of micros. Look, the 25K challenge lets me use 40 micro contracts. And so I can scale in and out with micros with relatively small size in futures. And that way I can limit my risk versus trading the regular Nasdaq. It's going to move so quickly. It's going to be hard to manage risk. But you build up a cushion first. You build up small profit first. And then once you have small profit, I usually go for $100. If I could build up a cushion of $100, great. Then I can scale up my size a little bit more, start taking more risk, start adding more, contracts and futures. And then if I lose, I'm break even. I scale back down my size. I start over again. I try to build up another $100 profit. Eventually it's going to stick, and I'm going to go from $100 in profit to $250 or $3. And then I got the decision where I can say, okay, well, I got $250 up on the day. Do I want to walk away, which a lot of the time is a good move, or I can say, okay, well, now I can take even larger size, and if I lose, I'm still back to break even or maybe a small green day. And so then I trade again. If I lose, again, I scale back down to size. I try to build up another cushion. If I win, then I got $500 or $600 on the day, right? And then I've got a big cushion. If I want to take a lot of risk and try to get a really account building day going, I can. And if I lose, I'm protected, right? That's how you manage risk in day trading. That's the right way to do it. You shouldn't be going out. I know the exciting thing, people marketing day trading is people are hopping out of bed, all excited, oh, the stock's running, guys, we gotta go, or whatever. I've seen some videos like that. They're cringy. But the reality is you want to start small. You want to start easy. You want to get your feet wet with small size on the day. Slowly scale up to larger size if you have a cushion. All right, chat. Again, Google just broke highs. SOUN trying to get up there. Nvidia's still breaking down, though. Let's look at the Q. Here's the Q. Q's getting up there. Yeah, you like the music? Thanks, man. Appreciate it. Yeah, I mean, all-time highs, Jay, like, it depends. Like, for whatever reason, somewhere along the lines, people put out a bunch of marketing for high of the day breakouts and like day trading. High of the day breakouts don't work. Not for me, at least. Most of the time, like, people that are actually experienced just take profit at those levels. And so they don't work that well. It's kind of like this as an example, right? Like, you could buy this high of the day. Most of the time, experienced traders are doing what? They're taking profit. They're selling once we get, because again, you got to understand, they're buying it down here and they're riding it up. And you know, when we dip and they're saying, when they don't take advantage of this move, they wait for it to get back up there and then they say, okay, it's back up there. Let me take profit. That's where you get these dumps back down. Same thing happens here. And so you got to understand, like, the range. High of the days typically don't work that great. Now, for me, it's relative to the trader, though. Yeah, SPY did break high of the days. Liquidity's so slow on the SPY, though. We're gonna get ready to day trade some too here, chat. There's Google. Google looks great. It's up there. It's making moves. Remember, the rollover happened yesterday, chat. And again, the good thing in futures is, like, if I want to trade the SPY, I can. Here's the SPY. You see the high of the day break, pull back here, same price action. Different price, of course, but same price action. So G, it depends on where you're looking at. It could be commissions. It could also be, look at your, if you're using Quant Tower like I am, look at your actual account balance. So you want to look at your actual account balance. Like you can see in mine, I'm up 150 bucks on the 300K one. So I can see my account balance is 150, 300K plus 150. So it depends. If you're on Quant Tower, the P&L is off. Like the P&L is off for sure. A lot of the time, at least. Yeah, well, Nvidia is just that big, crazy. Like, you get big stocks that do these parabolic runs, and it builds these huge followings. Tesla is certainly one of those stocks. But Nvidia, like, from somebody that covers, like, I cover all the major earnings reports, right? Tesla's earnings report used to be the biggest one we would ever do, right? Like, Tesla earnings used to be huge, and we would get so many people there, and, like, they would be crazy for Tesla earnings. This last earnings season, Tesla was pretty. I mean, we got over 10,000 views for Tesla earnings, but it wasn't like it historically was. And Nvidia earnings, we got almost 100,000 views. We had 14,000 concurrent people watching Nvidia's earnings report and call on my stream, and we got almost 100,000 views, the largest earnings stream we've ever done a couple weeks ago. And so Nvidia certainly has been the most watched earnings play for sure, and the most watched blue chip stock lately. Nvidia is the big one now. Like, everybody's watching Nvidia because Nvidia has the potential to influence markets, is what it is. Tesla can too, but Nvidia definitely has been that one, you know. Yeah, thanks, Lo-Fi. Appreciate it, man. Yeah, growth's been fun for sure. Apple at 172s. Yeah, I don't know if they're going bearish. I think Tesla still has supporters. Like, I think Tesla still has supporters, but like, I think Tesla still has supporters, but Nvidia just might have more now. Nvidia is just that big stock that has gone crazy. Yeah, I think Tesla's going to start taking off with FSD, is what I think personally. Google up to 142s. Apple still moving up. Nvidia dipping down though. Nvidia under 900s is interesting. Full self-driving is what. Again, I'm going to give you the argument for Tesla. Tesla has a lot of haters, right? But I'm going to give you the argument for it. Okay, like listen, and try to think about this objectively. I'm trying to look and predict the future of technology and automobiles, and I think one of the things that is incredibly clear, in my opinion, is that eventually we're going to get full self-driving vehicles. What I mean by that is eventually we're going to get cars that purely drive themselves without a driver. And I think that's something that, number one, we already basically have. You know, we already basically have it. We just don't have the infrastructure for it. Tesla specifically has this. It just doesn't have the infrastructure for it. That's the number one. Number two is that as technology and AI evolve and become more and more efficient, which is going to happen, right? This is inevitable. It's going to happen. FSD is going to be getting better, and it's going to become more efficient. It's going to become easier to build the infrastructure for because of these technological improvements, right? And so eventually we're going to get full self-driving. And I think Tesla, and it's going to be massive for the automobile industry. Of course, some people are not going to like it. People didn't like the carriage people didn't like the automobile when it first came out and replaced the carriage. The carriage industry was in shambles and all this stuff, of course. So, of course, people are not going to like everything. But I think it's very clear that FSD is the future of automobiles. I don't know if it's going to be in a year. I don't know if it's going to be in 20 years. I know eventually it's going to happen. And I think right now, Tesla is in the front of that. Tesla is on the forefront of that. Tesla has positioned themselves incredibly well for that technology. And so if they are in the front, outside of what they're doing with automobiles or anything like that, I think if Tesla can create that in an effective way and keep Tesla on the forefront, I think they're going to do very, very well over time. But of course, there's risks. I'm not saying it's a certainty. I don't know. I think it's probably going to happen, though. And if that's to happen, I think Tesla stock would do really well. Maybe not. I don't know. Again, speculating here. But I think that's pretty clear in future terms of in terms of like when you have to look at technology growth, I think that's very, very clear. That's very clear. The question there is, does another legacy automobile company get ahead of them? I don't think so. I think Tesla is the biggest believer in FSD right now. But who knows? You know, that's possible as well. What time is the PPI report? You know, listen, it might say right below me, right here in big letters. It also could have a timer, like over this way, right there. There might be a timer right there that counts down exactly how much time's left for PPI data. Could be. Yeah, I'm in SOUN. It looks good. Looks good. Still ramping up right now. I might take a little bit off here just to protect the trade. Yeah, all good, Brendan. I'm just kind of messing with you. Maybe Lucid will get ahead. I don't think so. Lucid's too small. Lucid's failing. I mean, it's at $2.80 a share. Again, the problem with Lucid is that it didn't establish a unique enough niche for its cars. It doesn't produce enough vehicles, and it's too new. Best case scenario is it gets bought out. It's been long-term downtrending as well. It's just not. I just don't see this one succeeding at all. Again, the problem is that it's not competitive enough. I mean, it's fast, but I don't think they've carved out a unique enough niche to make people want to buy them outside of a Tesla or a legacy Porsche or something like that, like a Porsche or something. Like, you can get an EV Porsche, right? That's the same niche Lucid is in, and I think people are going to go for the Porsche over Lucid. And I think this is probably true with most up-and-coming EV brands. Can you please troll again today? Top 3 trolls in the world right now, bro. I wonder if it'll let me label it. It could. Let me try. I could try. No, it won't let me. Nah. Yeah, we cover the SpaceX launches sometimes. Yeah, the risks for Elon are he's simply too outspoken and controversial on social media, and I think that's going to come back to bite him. I think he's just too controversial for a CEO selling things to consumers. You know, he has to understand that while he might initially get support, I think what you're going to slowly see a trickle effect of people not wanting to buy a Tesla anymore because he's too outspoken. You know, and so I think he needs to be careful and stop being so crazy on social media. Right, 100%. What is your opinion about Wall Street bets? I mean, I'm in GameStop and AMC right now. I hope they go up. Wall Street bets can be a little too gambly for me, though. You know, and I think they try. I think they're huge, and so I'm, you know, but I think they're slowly losing interest. Hey, well, good luck, David. I hope you make money, bro. It's not like I'm shorting Lucid. You know what I mean? Like, it's not like I'm shorting it. I hope you make money, bro. I don't trust it at all. You know, should be understandable, I think, right? Try to check Chat GPT. See, Chat GPT, bro. I'm like, hey, list homes in this city with prices under this, right? Like prices under this, because I'm looking to buy another rental property, and so I'm asking Chat GPT. I'm like, yo, look for homes under this price in this city, And it's like, its first answer is, it seems there might be some specific listings and info relevant to your search on realtor.com. Although I can't access the details directly. You can visit this site and find all the information. I said, no, just list the ones under 210,000, please. You don't need to give me more details. Just list the addresses and price of the homes in this city under this price range, right? Because again, I'm not getting a mortgage. I'm paying cash, right? So I'm looking at houses like 200,000, 210K is roughly like rental properties. And it gave me, and eventually it gave me some properties. And so I'm looking these properties up now. Alright guys, so SPY's still consolidating here. Watch Nvidia though. Nvidia over 900 is the big one. Ooh, this one's kind of nice. Yeah, APX 80%. 80% off. Beginner trading. Is someone in your social circle also in the financing or trading? I think it's important because you get other views from near ones. I mean, listen, I get a lot of different views from a lot of different people. You're saying that like I need to hear other people because I'm just really wrong or whatever. But I think and I'm not sure if that's how you meant it. What I'll tell you this is that I made money last year, and I'm up this year, you know? And so that's all I'm really saying. And so I have my own specific ways. The reality of it is you have to go with what you think. If you start trading okay, let me put it this way. My best trades were trades in which I bought positions in, and people told me, no, John, don't do that. That's a terrible trade. Don't do that, John. Don't buy that stock. Some of them shamed you and make fun of you. They say, this dude's buying Snapchat. What a joke, bro. You know, or this dude's buying Target. What a joke, bro. Or they say, this dude's buying Disney at, $75, $80 a share. What a joke, bro. Some of my best trades are that. And so it really is something where people get emotional about stocks. I try to take the emotion out of it, and I just kind of go with what I think. And again, that has done me very well, to be honest. And so I'm just going to keep doing that outside of what people think, Yeah, I'm not looking for Austin. I'm not going to be able to get a $210,000, $220,000 house in Austin, Texas, dude. Not in a good area, at least. All right, chat. We still got 45 minutes here. 45 minutes. Yeah, dude. Honestly, here's the reality. People get so weird about Snapchat, man. Like, people get weird about Disney. Like, I'm looking. Most of the investments or swing trades I take are trades in which are emotionally overreacted to. And so an example of this is Target. right? Target last year had some bad catalysts or whatever, and they dropped huge percentages very quickly down to $100. But in my mind, I'm like, look, every time I go to Target, it's packed. It's very busy. They're making a lot of money. People are still obviously going there, and the PE ratio is relatively low, right? So all of those things considered, I thought Target was cheap. I bought it up. When I bought it up, people get so political or emotional about different stocks or whatever. I don't care about any of that stuff. Like, when I see value, I try to buy stuff. And so Target looked valuable to me at $100 or wherever I bought it. I can't remember where it was. And again, in hindsight, it was very correct. It was very correct. Target ended up rebounding big percentages. It's gone from $102 in October of last year to $175, almost $180 right now. So it's $165 right now, but it got up to $175. But my point is, that was a trade that people mocked me and made fun of me when I bought it. I did the same thing with Snapchat, right? But again, Snapchat dipping down to $7 and $8 a share. I bought it earlier, like a while back, at $7 or $8 a share. And again, same thing. People mocked me. They made fun of me for it. It really is something. And now Snapchat's up to $12 a share. Basically, Snapchat has hundreds of millions of daily active users. It's very big with young people still. And so $7, $8 a share for Snapchat seemed cheap to me. And so we bought it up. Same thing with Disney, right? Disney is one of my favorite stocks to do this on. Anytime Disney dips down to $70, $80, $90 a share, I usually buy it up. And again, Disney's another one of those stocks that just kind of seems to get people really emotional. Again, I don't care about any of that stuff. I'm just trying to find value. And again, a lot of these, versus relative to the money they're bringing in, the PE ratios for the stocks, they're just valuable in that way. When they dip and they have big emotional downswings, I try to buy them up and I try to sit on them long term. And I think a lot of these are companies that if I'm wrong short term, I can hold it long enough and make money long term. Again, same thing with like in 2020, after the pandemic, a lot of stocks dumped, right? United Airlines dumped down to like $20 a share or something crazy. And at the time, I thought it was cheap. I ended up buying it. I made a video on my other channel about it. And I said, hey, I'm buying United Airlines at $20 or wherever because of this, right? Because it's, for these reasons. And again, in the comments section, people shamed me for it. They said, oh, these are garbage picks. These are terrible, terrible stock picks, John. What are you thinking, bro? Buying United Airlines right now? The market's about to crash, bro, they said. In hindsight, United Airlines ended up ripping up like 100% in like a month. And again, what happened is they went through and they deleted all those comments is what they did. And so, again, the overarching point I'm trying to make is that you're going to have people that are just hella emotional about things that try to talk you out of buying whatever, right? And me included. Maybe I'm going to try to talk you out of buying whatever. I'm not telling you not to listen to me, but go your own way in trading. Like, there's a lot of nuance in trading, and it's certainly subjective in terms of different like future outlooks. And so buy whatever you think you need to buy and learn from it. Start small. If you start to show success, then you can scale up in size. Is the best move. ChatGPT won't give me the listings. Tell it no. Say no. Say, please just list them for me. I don't need any more information. Just list them, and it will. I have GPT-4 though, James. So if you're using 3.5, it might not work. All right, chat. Hey, we got 40 minutes left. 40 minutes left. We got almost 700 people here live. Bro, I'm trying to look for houses, dude. These freaking builders, bro. They just flood it. They just freaking flood it, man. They just freaking flood it with ads, man. You can't ever see anything. Hey, what's Bulldog? What's up, Bulldog? Who's dog with hat? I don't even know who that is. I think GPT-4 is really solid, bro. Oh, dog with hat is a crypto. I don't even know. Those meme tokens, bro, they're going crazy, man. This thing's gone up from 17 cents in the last year up to 320. Crazy. Why is PPI the most important key factor for the Fed, and what is the difference between PPI and CPI? PPI is not the most important key factor for the Fed, number one, and CPI is much more important than PPI. The Fed likes to use what's called PCE, Personal Consumption Expenditure Index, right? So the Fed doesn't actually use, I mean, the Fed uses PPI, but not like CPI or PCE data. All right, chat. Again, time's coming. What's up, Smart Films, QCOM? Are we buying gold? I mean, we can look at gold. Gold's trying. The market's very flat ahead of this report. I think the whole market's waiting for PPI data to show up here, chat. So the market's waiting for PPI to come out. A lot of people talk about WIF. The Fed doesn't really use CPI that much. One, they use PCE data. I mean, they use regular CPI too, but again, a lot of it is PCE data and stuff like that. Yeah, I'm looking at some other stuff too, but hey, good luck. I'm in ARM long, but I've been in it since IPO day. So my average price on ARM is $63.55. So gold currently right now. Let's take a look at gold. We got Nvidia. There's the SPY on the right. Here's gold. So let's take a look. We got 35 minutes here, chat. 35 minutes. We got about 700 people here live. Again, gold right here at the bottom. That's at 2170s. If we put up a 5-minute chart, you see gold's moving a little bit. Let's put a 10-day chart up. Gold's had a really good 10-day period. It's gone from 2036 all the way to 2170s. Google's up a lot today. Again, Disney's had a great run. Jasmine got liquidated. If people come up above the previous, does that make the US dollar stronger? Yes. If PPI, I mean, typically, Jay, it's not always 100%. Usually, if inflation data comes in high, the market drops and the dollar gets stronger. Typically. It's not always the same, though, and it varies for sure. So, yeah, it's not always the same, and it does move either way, you know. All right, chat. Again, PPI data coming out today. Again, if you don't know, like, PPI is business. It's producer prices. If, all right, so again, CPI and PPI. CPI is consumer prices. PPI is producer prices. They're two sides of the same coin, but again, consumer price index measures the average change over time in prices paid by urban consumers for a bunch of different consumer goods and services. These goods and services are things like housing, like transportation, food, healthcare. What CPI really gauges is price fluctuations that impact consumers, and it's used to assess changes in the cost of living and purchasing power for individuals, right? So again, how much prices have gone up for consumers is basically what CPI is. Producer prices, on the other hand, PPI, which is today's report, measures the average change over time in the selling prices received by domestic producers for their output. It includes prices for goods at different production stages like raw materials, intermediate goods, finished products, so forth and so on, right? So PPI provides, you know, insight into inflation in the production lines within the production process industries like manufacturing, mining, and services. But PPI does not include taxes that affect prices paid by consumers. It reflects prices that producers receive for their goods and services. So again, it's used a little bit more to evaluate trends in production costs and to anticipate changes in consumer prices. So that's the difference between like CPI and PPI. Again, one is business prices increase or decrease. The other one is consumer prices increase or decrease. CPI tracks the spending patterns of consumers on goods and services. PPI tracks prices from the perspective of producers. PPI is a little bit more of a leading indicator as well, so it can kind of gauge leading. It can gauge, it's not a lagging indicator as much. I would rather trade the after move personally, Joshy, but I can't tell you what to do. I have no idea what anything's going to do. You know, so I would much rather trade the reaction to these moves versus the prediction of it, but that's just me personally. Remember, guys, I am terrible at this stuff and have no idea what I'm talking about. I might be wildly wrong about anything and everything I say. Don't copy me, not an investment professional. Understand rule CFTC, rule 4.41, chat. And, yeah. Yeah, costs are high, man. Costs are high. For sure. Yeah, man, AI is powerful. Only real inflation that is higher services driven by boomers. Hey, thank you. 1-2. Getting more powerful by the day. All right, guys, we got 750 people here live. Again, when PPI comes out, we'll have probably over 2,000, I'm assuming here. Probably over 2K. Yeah, I think what we're seeing right now in economics and business is like we're seeing, you know, I talked about this with my wife yesterday, but like what we see is like retail businesses are struggling, man. They're just struggling. Like I think the problem, I think it has to do with like culture, but like I think a lot of people want to start businesses, you know, but when they want to start businesses, they're so desperate to start a business that they don't actually like research the business. They're not actually strict in terms of location. They're not strict in terms of where they are, because location is freaking everything right now for a retail business. It's everything. Like an example of this is like I was gonna start a business recently with a couple different dudes. I was gonna start a business, and it was a business in which definitely location was everything, right? And one of the guys had just lost his job and like, you know, was kind of, you know, I could tell he wanted to get started really quickly, but long-term leases are not cheap. Like long-term leases or like commercial leases are not cheap. Like it costs $2 to $3 grand a month minimum for years. You got to get locked into those contracts, man. And again, it's just not cheap. And so he found this place and he was like, yeah, this is going to be the place. But when I looked at the area was very difficult to get to. Traffic, you know, the business would rely mostly around like 5 o'clock, like the big, you know, stuff would be around 5 o'clock, like the most traffic. And it was just very difficult to get to, very stressful to get to. And like ultimately it just wasn't a good fit. And you know, I ultimately had to be like, yo, like, look, this isn't the one. But I think people are, and it ended up causing a little bit of weirdness where he even got weird that like we wouldn't just kind of jump at it and just kind of do it anyway, right? And I think the problem is like people want to start businesses, but they rush into it, and for a lot of different reasons, they end up picking the wrong location. And location is freaking everything right now. Retail businesses are struggling. Like retail businesses are failing. It's not very easy to open up a retail business anymore here in the US. It's just not. Like there's a lot of commercial properties are struggling. A lot of commercial businesses are struggling. And if you open it in the wrong place, like you see people open up these businesses that are just, they don't make any sense. Like they're opening up businesses that they just don't have the consumer base they need. They don't have enough people that want to use their business to justify it. And so they open it up and then it's a ghost town in those businesses and they don't understand why. But I think you got to get the right location. You also have to do marketing. Like it's a tough thing, but I guess the point is retail businesses are in shambles. Yeah, data drops in about 30 minutes. Gareth Soloway is also shorting Bitcoin at 35K. You know? So, I mean, he's got to be upset right now. SPY moving up a little bit. Look at the SPY move. Gold up there as well. Nvidia's starting to bounce some too. There's the SPY. Hypothetically, if you were to open up a business that you think would be profitable for a decent investment, what would it be? I have no idea. You know? I have no idea. That's very vague. Again, I'm. If I knew that, I would open it. It's not easy to pick one right now. It's really not. Like right now, it's hard for businesses. It's just difficult. It's not easy to succeed. Most businesses fail right now. Most retail businesses especially fail. Like I was walking through the mall yesterday. And even at the mall, man, the mall had a lot of businesses that were just ghost towns. Nobody was there. I felt bad for a lot of the businesses you walk by. Like nobody's going to them. And so even the mall, like even if you get a prime spot in the mall, it's still difficult to succeed, man. You know, what's one of the most ironic parts about this new generation is the record store is busy. The record store, bro. Young people so desperately want to be 80s and 90s kids, dude. They so desperately want to be 80s and 90s kids, man. Like My daughter got a record player, and she's telling me how pure the sound is from the record player. I'm sitting there like, dude, get out of here. Like, the sound is not better than a record. It's worse. It's objectively worse, you know? Like, she's like, oh, the nostalgia. I'm like, you've never used a record player before. Kids, man. Like, honestly, kids nowadays, they dress like I did in the 90s. I wore Jinkos and baggy pants and had a shaggy hair and a wallet chain as a adolescent and teenager. As a teenager, I was more like preppy skateboarder. This was in the 2000s. But as a kid, in 5th grade, I wore Jinkos, you know, and baggy pants and a wallet chain. Kids nowadays dress exactly like this too. I told my daughter, I'm like, this is the only generation that dresses like their parents did. Like, this is the only generation. Like, usually it skips a generation. So, like, usually kids would dress different than their parents. This is the only generation that dresses like their parents did, you know. And I'm okay with it. Listen, that was my style back in the day. Wholesale businesses, yeah. I'm trying to understand American business mindset. I'm from another country. I mean, for me personally, to be honest, for me, I'm just going to start an online business. That's what I know well. That's what I can do well. That's what I can build, and I understand how to build it. Like, that's what I'm going to do. I'm just going to create an online business. But, you know, I think there's too much risks. Again, it would have to be something that I was truly, really passionate about if I was going to create a retail business with an actual, like, brick and mortar store. It'd have to be something I was truly passionate about because, but yeah, because it's just not, you know, the risk is so high, you know. Disney at 112.50s, Google at 142s, AMD at 194s. Top 3. Generation, nah. I'm a millennial, you know. What generation are you guys in chat? I'm a millennial personally. What are you guys? Google's still holding really well. You love to see it. I don't know whether gold's going to go up or down, chat. No idea if gold's going to go up, down, or sideways. Genuinely no idea. If gold's good or bad, up, down, sideways. No idea. Yeah. Gold. Gold. I'm a big believer in gold, bro. Like, I like gold. Outside of me getting the compound annual growth rate wrong the other day and arguing about it, I like gold, man. Gold's one of the best long-term investments. Gold has 7x'd, over 7x'd since 2000. So, I mean, gold's a good long-term investment. The problem is that short-term, it's incredibly volatile and risky. Long-term is good. Short-term, risky, you know. You gotta get in it at the right time. Nah, you were right, Yair. I had to use. I should have used the compound. I mean, neither of it. I wasn't using the compounding annual growth rate, and so I was wrong in that way for sure. So you were right. I was wrong. You were smart. I was dumb. You were very good looking, and I'm not attractive. Okay. All right. Anyways, Google up to 142s. Nvidia is still trying here. Look at Nvidia. SPY is very flat right now. Typically ahead of these big economic reports. One of the ideas that I had was that a lot of the time ahead of these reports, the market's flat and sideways. And so I should short at the top of the range and cover at the bottom. And I think that would have worked if I would have tried it on the SPY today. You know, like, here's the range. I think that would have worked. because the market's a lot of the time flat ahead of these big economic reports. I'm gonna have to test this theory out next week before the FOMC meeting. So like next week on Wednesday we have the FOMC meeting, and ahead of that at the open I'm gonna try this out and see if it works. Once we get to the top of the range, I'm gonna short. Once we get to the bottom of the range, I'm gonna go long. See if it works. Yeah, we got 20 minutes. No, you're not dumb. You have loads of viewers. No. I mean, I'm gonna tell you this. That doesn't mean I'm not dumb. I don't think I'm dumb, but like, viewers doesn't necessarily translate to intelligence. I'll just say that. Yeah, I swing trade. I invest. I do I day trade too. We do a little bit of everything. All right, guys, we still got 20 minutes until this report drops. 20 minutes. Retail sales, jobless claims, unemployment filings. Get ready, chat. Retail sales, jobless claims, unemployment filings. We got almost 1,000 people here. What is y'all's prediction for the FOMC meeting as well? They're going to pause rates. Y'all know this, right? Like, they're almost certainly going to pause rates. Does anybody in chat actually think they are going to cut rates next Wednesday? Does anybody actually think that? What do y'all think of Mike Tyson versus Gary Vee? Mike Tyson. Oh, dude, I feel so bad for him, man. The fact that he's fighting, or not Gary Vee. Mike Tyson versus Gary Vee would be a little bit better. Jake Paul versus Tyson. What do y'all think about that? He better not. Like, listen, I hope that fight falls out. I hope it doesn't happen. I feel so bad for Tyson, bro. People are like, oh, it's Tyson. Bro, Tyson's almost 60. It's never going to work. Like... Don't count Tyson out. He's still a beast. Did you watch him versus Roy Jones Jr.? Did anybody watch that fight? If y'all think that he's going to be able to keep up with Jake Paul, and I hate Jake Paul, bro. I don't like Jake Paul. Jake Paul's fighting washed up MMA fighters with no chin, you know, and then acting like he's the greatest. It's ridiculous, right? But Jake Paul is going to... Never mind. I'm not judging you if you're almost 60, Mikey, but I certainly wouldn't recommend you go fight a 25-year-old. You know. Yeah, it's gonna be good for Netflix. That's true. Where's Netflix at right now? Netflix at 600 plus. Netflix is one of the big... I'm a big bull in Netflix, too. I think Netflix is going to keep growing. In terms of streaming apps, Netflix is one of the biggest, and it's been producing higher and higher quality content. I just like Netflix as a company. It's up so much on the year. It's up over 100% this year, though. So it's a little bit too expensive for me to add more to Netflix here. But if it pulls back a big amount, I might buy it. Yeah, I mean, the reality is it depends on if it's a real fight or not, in all honesty. It depends on if the fight is real, right? What I mean by that is, like, Roy Jones and Tyson weren't really trying to knock each other out, right? It was mostly just a display of them fighting. It was basically like a trap for people to buy it. If it's like that, where it's not a real fight and they're kind of just sparring lightly with each other like Tyson and Roy Jones were, then it's just a waste of money and time, unfortunately. But if it's a real fight, I want to see the contract. If it's a real fight, then I'm interested in watching it. If it's not a real fight and it's just a sparring session, I don't really care about it either way. Yeah, but Anthony, the problem is that he's slow. He's not slow. He's fast. His chin's gone. He's 60. You know. All right, chat. We got 1,000 people here. We still got 15 minutes left until this report comes out. PPI expected at 0.3% month over month. 0.3% month over month. We have retail sales data. Now, core retail sales is important. We have regular retail sales expected at 0.8%. Jobless claims are expected at about 216 to 218,000. We'll see what those numbers show up as. And, yeah, I'm excited, guys. We'll see what we get. Hopefully we get some good stuff. How much will PPI move the market? What percent? I have no idea, bro. People ask me the craziest questions. Like, listen. I have no idea how much it's going to move the market, bro. I don't have a crystal ball, brother. You know, people ask me on FOMC day. Again, I've said this 1,000 times. But, like, if Jerome Powell walks outside and stumps his toe on the left side, you know, and then, you know, then jumps up and down 5 times, which way will the SPY close? You know, which direction will the SPY close today? I have no freaking idea, guys. Like, y'all are asking me stuff that nobody knows. You know? Top 3 crystal ball traders in the world right now. That sounds like a YouTube name. Do you know what the Nvidia CEO had for breakfast? Excellent. That's what he had for breakfast. And probably strippers, you know. All right, guys. E-mini sitting at 25 or 520, 5250. 5250 for the E-mini. Mostly flat. The SPY's trying to bounce back up. Gold just cracked under these lows. Here it's at 2170s. We ask you because you're top 3 in the world right now. Listen, I get it, man. I understand, you know. Let me ask ChatGPT. If Jerome Powell bumps his toe on his left foot, which way will the stock market go? I'm curious about AI's genuine answer to this. Jerome Powell bumping his toe would have no direct impact on the stock market. Market movements are typically influenced by broader economic indicators. Oh, so you mean Jerome Powell's toe's not the most broad economic indicator? Got it. Monetary policy decisions and global events, not personal incidents involving central bank officials. However, any significant news related to the Fed or its chair can influence market perception and investor sentiment. I mean, a very good answer by AI. Thank you, AI. You know, about to create the Jerome Powell toe ETF right now. Yeah, no, I'm just messing with you, Stephen. It's all good, brother. ChatGPT's gonna write a new algo with that question. I'm gonna post this AI question on Twitter. All right, AMC CEO posted something yesterday. Exciting programming news, given our long desire to increase having live sports on our big screens. AMC has reached an agreement with NBC to show some of their live daytime coverage. Yeah, but I think this is a waste of time. I just don't think people are going to care enough to go to a movie theater to watch sports like this. Like, bro, TVs have gotten so big and clear that, like, nobody needs to go to a theater to watch sports. You know, not unless you turn it into, like, a bar and there's, like, drinking involved and, like, you can hang out with people. Maybe that's different, but, like, I think it's a waste of time. I just don't think you got enough people that want to go watch sports at a movie theater instead of a bar or at home on their couch, you know. At Beginner Trades is my handle, at Beginner Trades. Y'all go give your boy a follow. Also, join our Discord. It's completely free. It doesn't cost a penny. You know, you got the top 3 greatest trader of all time, you know, gracing you with his presence here in our Discord. So, hey, join it right now, chat, if you haven't already. Also, check out our sponsors. If you haven't already, check out Apex, funded account programs. Apex recently, as of today, has an 80% off deal right now. 80% off. And so the base one, the 25K challenge, here's our Discord. The 25K challenge is only $30 right now if you use my link. Again, use promo code BT, Beginner Trading, get 80% off. Also, 1 day pass is back, so it only takes 1 day to pass. So if you hit the profit target today, you pass today. Big deal for Apex. Again, 80% off sale. It's gone up 10% from yesterday. Great way to help support the channel. Again, Apex, what they do is they give you a demo and they test your skill. Most day traders lose money, chat. And so if you think you're going to be an outlier, savant, prodigy trader, day trading the markets, turning $1,000 into $100K, you're not. Okay, most day traders lose. I lost thousands when I first got started. You probably will too if you put up the money yourself. In that regard, funded account programs are useful. What they do is they give you a demo and they test your skill. If you pass the test, the base one, you got to make $1,500 in profit without losing $1,500. So it's a 1-to-1 ratio, really reasonable. If you pass it, you get 25K in funding with a 90% split. Tons of great resources. You get to keep your first 25K in profit as well. And it limits your risk. If you lose, you're only out $30 what you pay for it. You can reset it and start again if you want. Again, it's only $30. But if you're good enough to pass it, you get 90% split anyway. So it limits your risk with a very similar reward to putting the money up yourself. And again, you can get 80% off. Use my promo code BT. They are a sponsor of mine. I'm biased because they pay me money. But still pretty useful for traders. Check them out. Theater sports would be so annoying. People would be sitting around judging people's every reaction to the anthem. It would be, yeah. Might get toxic. All right, chat, here we go. We got 7 minutes here before PPI data. Yeah, let me put it in sub-only mode. I'm going to put this in sub-only mode, chat. If you haven't already, hit the sub button. Hit the notification bell. We appreciate it. We are in sub-only mode. We got about 6 minutes left, chat. About 6 minutes left. Gold at 2170s. You can see the S&P. And the good thing about futures, guys, is that you could day trade the S&P 500. The same thing as the SPY, basically. You could day trade the QQQ price action and what's called the Nasdaq 100. It's what the Q actually tracks, is the Nasdaq 100 futures contracts. You can day trade short, buy market, sell market, all that good stuff. I might buy the dip. We're at a low of a range. I'm going to want to get out of this before PPI data in 2 minutes. But you can see I can day trade it. I can buy market, sell market. The other reason you want to use Apex is because you can use way more micro contracts, and micros genuinely limit your risk. Right? Like you can use up to 40 micros on the base one. On the top one, you can use hundreds of micro contracts. That's a powerful edge because micros limit your risk. Instead of taking a NASDAQ contract, which is very volatile, you can lower your size by 5 or whatever micros and genuinely limit your risk. All right, guys, PPI expected, again, at 0.3% today, 0.3%. Core PPI, chat, is expected at, let me see, core PPI expected at 0.2% today, 0.2% on the month. And so, yeah, it'll be fun. Jobless claims expected at 216 to 218,000. What's up, Jay? What's up, Jay? All right, so I'm probably going to get ready to cut this. We got less than 5 minutes here. I don't want to get stuck in this trap. I don't know. Never seen it, Russ. Yeah, you can get a one-time fee and monthly goes away, you know. All right, so I'm going to cut this. We lost like about 20 bucks today. Yesterday we made hundreds, and so we're good. But we're going to cut this because we got data coming out in about 4 minutes, chat. 4 minutes here. Again, give me your last minute predictions out. Let me know you're subbed. Help support your boy here in this channel. Announce yourself. What time is the SpaceX launch? All right, chat. We got about 4 minutes. I don't know how PPI is going to affect the market. It depends on what it comes in as. Typically, higher PPI means higher inflation problems, but also more economic growth. And so it's nuanced. Lower means lower inflation problems, but also less economic growth. And so we don't really know. Expectations are 0.3% month over month. Core is expected at 0.2%. So we'll see. No idea what we're going to get here. I hope we get positive stuff, but who knows? We also have retail sales, chat. Retail sales expected at 0.8%. So a lot of stuff's dropping right now. Retail sales, PPI data. 3 minutes here, team. 3 minutes. All right, so again, we're very flat here in the E-mini. Nvidia rejected at the volume weighted average price too. Look at that level. Gold started to bounce up. It's at 2170s. All right, chat, we got about 1,700 people here live. We still got 2.5 minutes left. Hit the live button next to the play button. Make sure you're fully caught up on stream here, team. Yeah, we got about 2 minutes, you know, give or take. Countdown's a little bit late, I would say, so it's going to come out a little bit before then. Hit the live button next to the play button. You'll be caught up. All right, so again, we're still in the stagnant range. We got gold on the right side. I'm going to put the Nasdaq up, I think, instead. So here's the Nasdaq. All right, so here's the Nasdaq. Wait. All right, so here's the Nasdaq. Again, here's gold, here's Nvidia on the right side. So this is the Nasdaq 100, basically the QQQ. Stagnant range here, chat. We got 1 minute left here, 1 minute. Yeah, we're definitely not that much delayed. You can hit the live button next to the play button, catch back up. This timer is a little bit late. So right now we have about 45 seconds left. So I mean, yeah, this is a little bit late. So I'll get this out the screen since it's confusing people. But yeah, we got about 35 seconds left. All right, chat, you guys ready? Here we go. 20 seconds, 25 seconds, really. All right, 10 seconds here, chat. 10 seconds. Here we go. And here's the report. All right, jobless claims 209,000. PPI came in at 0.6%. 0.6% versus 0.3% expected. Retail sales came in lower than expected at 0.6% versus 0.8%. And so higher than expected PPI data lower than expected jobless claims, lower than expected retail sales. Core PPI showed up at 2% on the year, on the month, 0.3%. Higher core PPI than expected, higher regular PPI than expected, lower retail sales than expected, and lower jobless claims than expected. So pretty neutral data here. I mean, listen, PPI was higher than expected, right? So inflation data was higher than expected. Jobless claims was lower than expected, signaling economic growth. Retail sales was lower than expected, signaling economic weakness. And the market is so far reacting negatively to this. Here's a pullback. We're at 18.382 right now, 18.382. We'll get these numbers up on screen. But again, retail sales came in at 0.3% for core retail sales versus 0.5%, 0.6% versus 0.8% for regular retail sales. Again, PPI data for the year came in at, or for the month came in at 0.6 versus 0.3% expected here, chat. So again, 0.6 versus 0.3, higher than expected PPI data, lower than expected jobless claims numbers, lower than expected retail sales data. So that is the report right now. Again, let me put this up on screen. But again, PPI data, again, chat, came in at 0.6 versus 0.8 versus 0.3% expected. Market is dumping down. Put this up on screen. We'll get the rest of the stuff up here as well. Here, chat. Let me pull this up. But yeah. Here's PPI. We'll get the rest up here too. We'll get core up as well. We'll try to get core. Jobless claims. Retail sales came in at 0.6 versus 0.8. So yeah, retail sales 0.6 versus 0.8. Core retail sales 0.3 versus 0.5%. So yeah, the retail sales universally came in under expected numbers. Jobless claims came in lower than expected. All right, so here's most of the numbers that just dropped here, chat. The market's not liking this. Market's dumping down a little bit. Again, higher inflation data, more people working as well, so more people potentially spending. Worse inflation data, but also stuff that signaled more spending here as well. So again, worse inflation data as well as potentially more signals for spending increasing. Jobless claims came in lower, which means more people working, lower unemployment. Again, retail sales were down. PPI was high. Yeah, we're not going to cut rates this month, almost certainly. Like, we're not going to cut rates this month. John, what color socks should I wear? Purple and gold, you know. But yeah. All right, chat. There we go. PPI final demand came in at 0.3 versus 0.2% for core PPI month over month. 0.6 versus 0.3% for regular. So this is the micro Nasdaq. We're going to get ready to day trade this. We're going to short into this and see if we get a correction and maybe add some more. Try to take a little risk here. I'll try to add maybe up to 4 if it pushes up enough. Yeah, there's 1. There's 4. All right, we're going to take half of that off, lock that in. Profit. Again, we're trading on Apex's funded account program where they give you a demo, they test your skill. If you can pass the test, they fund you. We recently got $300,000 in funding. We're going to go ahead and take a little piece off of that. We're trying to build up a small cushion on the day first here, chat. So we're trying to build up a cushion on the day. We might actually add to this a little bit more. Take a little bit more off, lock that in. All right, so yeah, chat. We're shorting this. And again, you can see I'm day trading this very similar to stocks. The futures market, there's no PDT rule. I can day trade essentially the SPY, essentially the Q, and what's called the E-mini or the Nasdaq 100. Again, what they do is they give you a demo and they test your skill. And this is really useful and powerful because it limits your risk in the beginning to only what you pay for it. The base one's only $30 right now if you use my link. The top one, I think it's around 180 right now if you use my link. Again, use promo code BT, you'll get the max discount. But again, if you lose, you're only out what you pay for it. So if I lose the base one, I'm only out $30 versus putting up the money myself in day trading, incredibly risky. Most day traders lose. And so you can limit your risk, learn to day trade, and if you lose, it's not the end of the world. You still learn how to trade under pressure, all that good stuff. But if you're good enough to pass it, they fund you, you know. Again, if you pass the base one, you get 25K in funding with a 90% split. All right, so yeah, we just built up some profit. We're green on the day finally. But if you lose, you're only out 30 bucks. You know, great way to help support the channel. Again, use promo code BT, beginner trading. At checkout, or when you activate your funded account, you see the one-time fee, TC. So the one-time fee is only for the funded accounts. 50% of the time it works every time. 150 is the sweet spot. Yeah, I'm in the 300K one now. This is the $300,000 one. And again, they're a sponsor of mine. I'm biased, of course, because they pay me money. But I genuinely, like, again, when I first got started day trading, I lost thousands of dollars in the first 3 weeks, day trading stocks. Again, I got sold by day trading gurus. I can get rich. You know, I put up 4K. Carol was like, John, don't do it. And I did it anyway, and I lost all of it in 3 weeks. And so, again, I think that's a very common story. And so these funded account programs, if you think you're going to be an outlier day trading stocks or trying to put up the money yourself, you're probably not. And so, again, I'm biased because they're a sponsor, but I think it's genuinely powerful because it limits new trader risk, ultimately. All right, Chad. So, again, we've been shorting this move. We're up a little bit on the day now, day trading. The other good thing about Apex is that you can use a ton of micro contracts. So you can use smaller size and limit your risk significantly. And that's a powerful thing, a very powerful thing. Yeah, you could use it for the reset, Philip. You know, you want to use it for the reset. It'll get you the max discount. Again, it's BT, beginner trading, BT. The SQ is just going to do the opposite of the regular Q that's on the screen, Jay. So the SQ is going to be the opposite of this right now, bro. Like, if you want to know what the SQ is doing, the SQ is probably looking something like this. You know, it's going to be the opposite of this current screen. Like, it's the short Q. Because this is the QQQ price action, what I'm day trading here in futures. Yeah, I mean, markets are still up a little bit. So, I mean, even with this dip, we're slightly red, actually, on the Q of the day. Oh, no, we're green on the day. So, yeah, the Q's still green on the day. So, this is still green. So, PPI didn't affect the market that much. We'll see what happens, though. We're still technically green on the day. We're pulling back a little bit now, though. Next week, the FOMC meeting is going to be huge. And again, stick around. We are going to be day trading futures today. Consolidating here. We built up a small cushion. We're going to keep trying. Let's see how that goes. The report was not good. It was higher inflation, lower retail sales, lower jobless claims, which signals more people working, but a lot of it contributed to higher inflation fears is what's going on right now. So again, we had a bunch of reports drop right at 8:30. All of this contributed to more inflation fears. That's the thing to understand. So this all signals more inflation fears, less likelihood of a rate cut next week, more likely that the Fed's going to remain hawkish for some time and try to get inflation under control. You know, again, to understand economic policy and the Fed and economics, really, you have to understand the Fed's job is to keep a balanced economy. Okay, so if the economy is risking too far to one side, whether that is like depression and recession risks, like economic weakness, that they can step in and do what's called quantitative easing, or they can also reduce interest rates to consumers by reducing the federal funds rate. There's a lot of tools that they can use to try to bring interest rates down, right? Because the logic of that, you saw this in 2020 as well as 2008. The Federal Reserve, when the economy is at risk for a depression, recession, all that good stuff, too little spending, too weak of a economy, too weak demand, what the Fed wants to do is they want to bring interest rates down. The reason they bring interest rates down when the economy is struggling is simple, is because bringing interest rates down to consumers allows them to spend more. Okay, so an example of this is mortgages. If the average person is paying less in their mortgage, they have more money to spend on other stuff. If they're paying $1,000 a month in a mortgage versus $3,000, they've got much more money to spend on other stuff, thus stimulating the economy. And so when the economy is at risk, the Federal Reserve want to bring interest rates down to encourage spending and save the economy. Okay, they can do this through, again, what's called quantitative easing, which is essentially money printing. It's basically the Fed coming in, buying up a bunch of bonds, expanding their balance sheet, and allowing banks to lower interest rates to consumers. They can reduce the federal funds rate, which is how much banks charge each other to lend money overnight, the interest rate they charge each other to lend money overnight, and eventually that'll trickle into lower interest rates to consumers, right? That's one side of it, but one of the consequences to this is inflation. When consumers spend more, prices rise. It's what we saw after 2020 when the Fed stepped in and did quantitative easing, reducing interest rates and all that stuff. One of the consequences was higher prices. Money was spent, people started spending more, prices went up. And that was the consequence. And so for the following years after 2020 and the quantitative easing, the dovish, what's called a dovish Fed, a Fed that's trying to bring interest rates down, one of the consequences was high prices. Interest rates skyrocketed, got almost up to 9% at one point. And the Fed then plays the other side of that, right? If the economy is too far at the risk of being too strong, too robust, too much spending, too much inflation problems, which is kind of what we're in now, the Fed takes what's called a hawkish stance, where they're trying to bring interest rates up. And they can also do what's called quantitative tightening, which means that they are going to be, most of the time it's not direct QT, where they're directly selling bonds to bring interest rates up. Most of the time they're just letting their current balance sheet, treasury bonds run off and expire and mature. And again, that's called quantitative tightening or passive quantitative tightening. But again, those are the two sides, whether the economy is too strong and inflation is a risk, which is kind of right now, versus the economy in depression and recession is at risk. Right now, we're in a period of quantitative tightening, which means that the economy is too strong and we're trying to bring interest rates up to discourage spending. Too much spending is happening right now. But again, interest rates are still pretty high, and we have seen better inflation problems. Like, inflation has gone down over the last few years. It was almost at 9%. It's at roughly 3% right now. And again, the question, the Fed raises rates. And again, raising rates eventually raises interest rates to consumers. And so right now we're in a period of what's called pausing rates. So we're not lowering rates, which is a rate cut. But the Fed said they're probably going to cut rates this year. That's their base case, that the Fed is probably going to cut interest rates this year, right? And reduce the federal funds rate, try to bring interest rates down to consumers. But again, we don't know when that's going to be, and it all is relative to what inflation risks are there. If inflation is out of control, the Fed's more likely to not cut rates, more likely to at least pause, which is what we're currently been doing, or at least or potentially raise rates to discourage spending and bring interest rates up. But again, interest rates are pretty high right now, and spending has gotten a little bit more under control with inflation. But again, we don't know when we're going to cut rates. What this inflation report ultimately shows is people are still spending. Jobless claims are low, which means that less people are filing for unemployment, i.e. more spending, more potential inflation problems, and PPI and CPI inflation were higher than expected. Okay, that's what this week showed us, which means the Fed is less likely to start cutting rates and trying to bring interest rates down. They're more likely to pause rates this next cycle next week. And so that's what you should expect next week, a Fed pause. They're almost certainly not going to cut rates. And again, you'll know when they start to potentially cut rates when inflation is a little more under control. I mean, again, they could cut rates. Anything could happen, but it's probably not. And so again, that's kind of looking at economics from a Federal Reserve perspective. Like, that's what the Federal Reserve does. That's what we're looking at now. And again, that's why somebody yesterday said that we were in a recession right now, which is, again, it shows that they don't understand economics, because right now we're in the opposite of a recession. We have too much spending, too many people spending money right now. Like, too many people are spending, too many people are bringing prices up, and inflation's rough right now. And again, this PPI inflation report shows the same thing. All right. Anyways, I'm out of breath explaining economics to people here. Is Tesla green again? I hope so, man. Is it running up? Hey, Tesla is running up. It must be some good news. Finally, I needed this. I mean, I'm not down that much, but like, I want Tesla to do well. What's the news on Tesla here, chat? Yeah, anybody know why Tesla's running up? All right, so kind of a flat economic report here. We have PPI, retail sales, jobless claims numbers. Hey, thanks so much for the donation. Earlier, I forgot to... Hey, what's up, Stefan? Yeah, man, I'm trying to help people understand. Too many people spending. How much do you spend to have a beautiful beard? I spend the most on my beard. Okay, no, I don't. All I really do is I keep a gauge of like 3. So I use a 3 gauge and I just kind of go over my beard every week or 2 and just keep it short. Kind of like a 5 o'clock shadow almost. Anybody know why Tesla's running up? What can we expect in the markets with a Fed pause? Fed pause is neutral. It's what's expected, Franny. So a Fed pause means that they're not raising rates, they're not cutting rates. They're leaving interest rates unchanged, and it signals neutrality. So I don't know. It's very nuanced. Nobody knows what a pause is going to do. Again, a pause is overwhelmingly expected. If you look at the Fed Watch tool here, you'll see a pause is almost certain. We're at 99% expecting a pause, only 1% expecting a 25 basis point cut. And so it's just super unlikely that we're going to do anything outside of a pause. Although crazier things have happened, it's just not super probable. Yeah, it could be the SpaceX launch. I guess that makes sense. Yeah, when are the big days for the Nvidia AI conference? I'm going to be streaming it next week, but I'm wondering when the big days are going to be. All right, chat. How you guys doing today? Y'all red or green? I kind of want to short this. I think I will, but it's risky. And we're already green on the day, so we got a little bit of a cushion on the day here. I'm just going to take a couple contracts, try to let this work a little bit. So we got 2 contracts here. I could add up to maybe 4. Just trying to build up that $100 cushion or so we could take larger risks. I took half off there, locked it in. Take the rest off there. Not too shabby here, chat. We're up a little bit on the day. We'll keep trying to grind up some profit. All right, chat. All right, so Tesla very green on the day now too, up to over, or not very green, but green nonetheless on the day here. We'll see if that continues. Yeah, but again, we're just not in the technical signs we're not in the technical signs of a recession. We're just not, you know. Again, sometimes people that get wrapped up in politics or that follow YouTubers that are telling them the market's going to crash every other day, sometimes like they try to make the market seem to be like it's the worst ever, you know. And right now it's certainly not the best ever, but it's certainly a very strong economy currently in terms of spending. Spending's high for whatever reason. Spending's high, you know. Yeah, I saw Palantir. I'm in Palantir right now. Still at 25s. I've already scaled out of some of it though, so we've protected ourselves. Yeah, I don't know. All of it's not market manipulation. A lot of it, like what you'll see a lot of the time, is you'll see people, like you'll see these mentors in day trading, like these day trading mentors that sold courses on day trading, all of a sudden pivot to like economics and markets. And, you know, day traders are used to volatility and craziness and short bias and all this different stuff. And so when they try to bring that mindset to investing or economy, they tend to overbet on shorts and market crashes and weakness and recessions and depressions, and they underbet on the biggest edge the market ever gives you, which is on the upside, you know. Also, sky is falling is easier to get clicks. Like, it's easier to get views if you tell people the market's about to crash, you know. And so you'll see some YouTubers have been saying the market's going to crash every other week for like years and years now. Eventually they're going to get it right, and you better believe they're going to sit there and say they told you so, even though they've been wrong 90% of the time. But I guess it's just how it goes. The funniest ones are the ones that are so easy to check. Like, you'll see ones that are going to say, hey, tomorrow the market's going to crash, you know, and they're sitting there like, you know what I mean? And then you go look at the market's up 10% or 5% that week. You know, and then they make a bunch of videos to kind of dilute, to like take away from the fact that they told everybody the market was going to crash, or they told everybody this stock was going to crash. And nobody cries manipulation more than somebody that's been really wrong about a short-term prediction, you know. Tesla consolidating around that previous closing price. I think it probably has to do... somebody said, did Tesla get some good news TV? I think it probably has to do with the rocket launch today. If you had $1 million to invest, where would you throw it? I would probably, if I had $1 million to invest, I would take 20% of it and I'd put it in bonds. So I'd take 200,000, put it in bonds. Right now they're paying about 4%. I get about $8,000 a year from those bond payments for about, and then at the end of that 10-year period, I'd get that $200,000 back just to diversify. I'd probably stick about $350 into the S&P 500 at the Nasdaq, giving you about 8% a year. So it's put about $350 in the S&P or the Nasdaq, giving you about 8% a year. And in 10 years, that portfolio could look something like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Be about $750K in 10 years or so. I'd take some of it and put it in either real estate investment trusts or real estate in general, and diversify into real estate. Probably just REITs, just because it's going to be hard to get a house unless you can buy an actual house. You could buy rental properties with it as well. And then I'd probably stick some of it in gold. And I'd probably sit on that long term, live off of the interest. And crypto, yeah, no, for sure. I'd definitely put some in Bitcoin and ETH. I'd probably avoid everything else, but I'd put some of it in Bitcoin and ETH for sure. I'd probably try to put at least 10% there. Challenge microsailor. No Solana? Nah. Solana's good. But again, long term, I'm going to try to go with the easy money. $1 million on Doge. Nah, I'm not going to put 100% in anything. Somebody said 100% in Bitcoin. I'm not going to put 100% in anything. Just because, like, regardless of how much you believe in something, diversification is a powerful thing. Like, diversify into everything and you'll be good, you know. You're almost guaranteed to make money with the portfolio I just talked about. You got to leave it alone though. You can't play, like, you can't keep messing with it. You got to leave it alone. $100% the Michael Jordan rookie cards. I think they're going to go down in price because, like, you got to understand, Jordan rookie cards went up in value a lot whenever the documentary on Netflix came out about his seasons with the Bulls. Now that that's over, I think they had a pop and a pump from it in card prices, but I think they'll probably start to go down eventually. Maybe I'm wrong. I could be wrong. That's something that's super, super nuanced. I don't know. All right, so we're stagnant here, waiting for the opening bell. We still got about 30 minutes until the open. The best investment is property. Homes in the right neighborhood make huge profits. Kind of. I mean, it depends on it. Number one, the right area is very difficult to predict. And so what might be the right area today might be the wrong area tomorrow. You know, and so it's very difficult to predict. Number one, though, I do believe in real estate because real estate appreciates on average like 5% a year. And if you get a cash flow property, a rental property, you know, then you're not only earning about 5% a year in appreciation, but you're also getting cash flow on top of that, right? And I think that's a powerful thing. So real estate's very powerful. You just gotta be smart with it. And again, I'm not gonna put all my money into it. You know, like it depends. It depends. Streamer, he invested in himself. Obviously his channel was doing great. Take notes. Hey, I appreciate it. My channel's grown a lot, man, over the last few years. It's been growing quickly too, so it's been fun. The last like 3 months have been crazy. We had our largest stream ever, with Nvidia earnings. We had our largest stream ever. Got almost 100,000 views for just that Nvidia earnings stream. That day, we got over 100,000 views when you take into consideration the Fed minutes report. All right, so market looks like a bear flag right now, but we're also sideways a lot, and so we're also very flat and neutral and kind of choppy. So we'll see, chat. We'll see. I don't have a coupon code, but I got. Use promo code BTRADE, BTRADE. Here's the link if you want to check out Chart Prime. Great way to help support the channel too. Yeah, that's what Cuban did. Cuban for his first, Cuban sold a company when he was young, and made millions from it. The first thing he did was he bought a lifetime pass from like American Airlines or somewhere. I can't remember which airline he bought it from, but he bought a lifetime pass, so he could basically travel anywhere for free, which is a cool thing. That's a cool thing. I'm too afraid of planes to do that. I'm scared of flying. I'll fly. I'm not one of those people that's gonna freak out and disrupt the plane, you know. But I certainly don't like flying. I'd rather drive for 3 days than fly for 2 hours. All right, chat. So we still got about 30 minutes until the market opens. How you guys doing today? Y'all red or green? We're green slightly. So we're slightly green, chat. Slightly green. We'll see if it keeps up. Cuban started streaming. I can thank my YouTube channel to Cuban. Cuban is one of the people that started live streaming. Was the data good or bad? I would argue it was bad, but it's very nuanced. We had a lot of different reports drop all at once. We had retail sales come in lower than expected, signaling less economic growth, but also less inflation and spending problems, right? That's the first thing. Retail sales lower than expected, which signals less economic growth, but less inflation problems, right? That's the first one. The second one is PPI. PPI came in higher than expected everywhere, which signals more inflation problems, more spending, higher prices for businesses. All right, so that's the second thing. PPI were higher than expected. PPI inflation problems signaled retail sales, less inflation problems signaled. Jobless claims came in lower than expected, which signals economic growth and potentially more spending problems. So that's the reason the market mostly reacted negatively here, was because inflation fears are still there. What this means is that next week during the FOMC decision, we're almost certainly not going to cut rates. Hey, I don't need you to do that, Jay. I'm good, bro. Like I said, man, we got over 1,000 people here still, you know. Don't go bug other streams. I'd appreciate it not to, really, you know. Again, if you do want to help your boy out here, check out Apex. Apex funded account program. It just saves money when you learn to day trade most of the time. Again, most day traders lose money. The way I got started day trading is I started day trading. I watched The Big Short, and I was a poker player. You know, I love checkers and chess and strategy games, and I saw The Big Short, and I realized how much money you can make. But the problem is, like, you get home and you think that you're just gonna. Every day trader has the same dream. They think they're gonna be some prodigy day trader that, you know, shows everybody how smart you are and all this different stuff. And I thought the same thing. I ended up losing thousands of dollars in the beginning, and that's a very common story. Most day traders lose. So the edge of these funded account programs is that it simply limits your risk. You still learn how to trade under pressure because, again, it's a funded account program. So they give you a demo and they test your skill with that demo. And if you can pass the test, then they fund you the same amount as the demo. So the base one's $25K demo. If you pass it, you get $25K in funding with a 90% split. It's only $30 to try the challenge. And so you're still risking something. It's not like you're just blindly paper trading with no risk. You're still risking something, and that teaches you how to trade under pressure, but the risk is severely less than having to put up thousands yourself and risking that day trading. It's severely less. Again, there's no PDT in futures. I can still day trade the SPY price action and what's called the S&P E-mini. I can trade really what the SPY is tracking, really what the Q is tracking, and what's called the Nasdaq 100 E-mini. And again, there's no PDT rule. The liquidity is actually better in futures, and the patterns are very similar to day trading stocks. There's just no PDT rule. You could day trade short, all that good stuff, no PDT rule. And again, it's the best of both worlds is what I describe it. If you lose, you're only out what you pay for it. Base one's $30. So you're only out $30 if you lose. But if you're good enough to pass it, you get 25 grand in funding with a 90% split. And to pass the base one, you just got to make $1,500 in profit without hitting their max loss and following their rules. And so, and again, for the time being, it's 80% off and it's a one-day pass. Typically, it takes at least 3 days to pass these. You have to trade at least 3 days. But for now, it's just 1 day. And so, check it out if you want to help support the channel. There's the link. They are a sponsor. I'm biased. You know, remember, I'm terrible at this stuff. And again, the big part about Apex is that you can use tons of micros tens up to hundreds of micro contracts, which genuinely limits your risk and allows you to trade small. And I think the edge is just so much higher with micros. Just a lot easier to day trade these with micros and build up small profits on the day to build that cushion. And then once you have that cushion, then you can scale up or whatever. Just remember, use promo code BT, beginner trading BT. The base one, the 25K one, you could trade up to 40, I think, micros. The one I'm in right now, this is I got funded in 300,000 Rhythmic account a few days ago. So this is my 300K funded on Rhythmic. I'm pretty sure I can buy up to hundreds of micros on this right now. Very flat though, y'all. Be careful. This is Apex, Johnny. $0.40 from Bitcoin Cash and $2 from BNB. Good luck, King. Yeah, I don't know, man. My last name is London, you know, but I'm British. I did one of those 23andMe DNA tests. It came through. I am 60% British, which was not a shock, not a surprise. I'm 60% British. I'm 60% British. I was like 20% French, and then I was like 3% African, believe it or not. 3% African. I was like, and then a bunch of other small percentages, right? But those are the three largest. I was English, French, and and small percentage of African, and then a bunch of other small percentages. I'm from Louisiana, so I'm Cajun, you know. Do you also take 90% of the losses once funded? No. Your risk is only what you pay for it. I don't know. My wife took one. She didn't have any, you know. My wife took one. She was mostly French, I'm pretty sure. I'm pretty sure you can use it in the UK. Yeah, that's the great thing about Apex is you can buy a bunch of micros. Core retail sales. Core retail sales. 0.3% lower than expected. Most retail sales came in lower than expected, right? Which signals less economic growth, of course. But again, that was, I think these results are kind of neutral. We had less economic growth in retail sales data, more economic growth in PPI and jobless claims numbers, right? So it's pretty neutral, to be honest here. Some of them signaled higher economic growth, but more inflation problems like jobless claims and PPI. Others signaled less economic growth, but less inflation problems like retail sales, right? So it's pretty neutral to me. Now PPI is probably a larger report than the other two, than jobless claims, which is a weekly report on unemployment filings, but still, nonetheless, like, it's still flat, and the market's kind of behaving and such. I mean, it's down a little bit, but it's not. I'm gonna short this actually. Sorry, it's down a little bit, this kind of looks weak. We'll see if we can short it. We're green on the day. I'm gonna try to add up to this. So these are micro contracts. So you can see it's just much less risk doing this than if I traded like one contract of the regular Nasdaq. Is gonna move so much faster than this, right? Like that's the big edge with Apex, is that I can buy these micros. My risk is very small and limited, and build up small profits on the day over and over again like I do. So yeah, we're gonna cut half of that, lock it in, just like this. Small trades. So we're out. So yeah, we're up almost, yeah, we're up on the day. Yesterday we made money. Hey, congrats, Moon. He said taking my first ever payout tomorrow with Apex. Hey, congrats, brother. Yeah, so we're up like 50 bucks on the day. We're waiting for the opening bell in about 20 minutes to really attack some stuff here. Yeah, I mean, it might look like I'm being impulsive, but it's not. It might go against your trading strategy, but it doesn't mean it's wrong. Right, so like, let me explain this trade. Okay, a lot of the time, these lows of the day levels are kind of like magnets. And so what I mean by this is like a lot of the time we're going to test a low or form a low. We're going to do a small bounce back and then we're going to retest that low, right? Especially in a rangy market like this. A lot of the time we're at least going to get another retest like this and then bounce back up. We might do the same thing here. And so with this trade, I was basically betting that it was going to do the same thing, that we'd hit a low, we form the previous low, we bounce back up, and then we'd retrace that low here. And that's a very, very common thing. I'm not holding it. I mean, look, for those that say my trade was wrong, look at what it's doing right now. It's doing exactly what I'm showing you guys. Like, it's doing exactly what I just told you guys it would. It does a lot. Because again, you got to understand, like, I'm not going to buy a break of this level, right? You know why? Is because these breaks of these levels will fake you out a ton. I'm instead buying a retest of that level. I think that gives me the least risk, but the highest percentage chance for it to follow through and play out. You know, you could short this low of the day break, and a lot of the time, even if it doesn't here, it's going to bounce right back and fake everybody out, because low of the days and high of the day breakouts typically just don't work very well for me. Instead, slow and methodical and you know, small little range trade works the best, but everybody's different. And just because I trade different than you doesn't mean it's necessarily wrong. Everybody's different. Yep, and what did I say? I said if you buy this low at the daybreak level, a lot of the time it's gonna fake you out and bounce right back. And so we're seeing that now. Maybe it rejects, but again, we're just attacking a range. Hoping for reversals and breakdowns. Yeah, I'm not looking for a bounce back up. I'm looking to attack a range. It's the easiest way to do it. You know, and again, exactly what we said would happen is happening right now. You know, so again, you got a lot of traders that just try to short low of the day breakouts, and they don't understand why they don't work. You know, I'd rather just attack the little range, because something that's really high percentage is when it forms a low, tests that low, bounces back a little bit. A lot of the time, it's going to retest it, even if it doesn't hold, which it's not right here. You know, that's all I was doing. A little range trade to build up a small cushion on the day. And there it goes. You know. Yeah, it's all good. It's a scalping strategy, so a lot of people don't understand it, and it looks random. But like, what I was really waiting for that whole time is for it to test this low and bounce. Again, it retraced it back up and down a couple times, and I probably didn't hold it long enough. But I'm in the profit building part of my account, so I'm just trying to build up a small cushion on the day first. Yeah, all good, Nathan. I appreciate it. And again, I'm not claiming to even be a good trader or anything like that. I'm not an investment professional. I don't sell a course or anything like that. Like, I just let people watch me trade. I think my real skill is mostly in investing long term and swing trading. I think that's where that's where I have a large edge, in my opinion. Don't copy me. I don't want anybody to copy me, but I like my trades long term. With that said, though, it's been really easy to make money with everything shooting up every week, you know. Visa? Maybe. What's Visa? V, right? Yeah, just V. Great year. It's had a great year. 208s to 290s. So it's up. It's up like 40 something percent. So very, very good year for it. All right, guys, we got 13 minutes. Yeah, and again, this is an example of why you don't blindly short low of the day breakouts. People, like, day traders get so stubborn, right? And you see this a lot with new traders where they learn a specific strategy. Maybe some dude teaches them this on YouTube or whatever it is, but they'll learn a specific strategy, and then they'll just keep on hammering that strategy, even though it's not working. Right? Even though they're losing money over and over again, they might have one good trade with it and they think it just works, right? So they keep on attacking it even though their accuracy rate's like 30-40%. They just kind of keep on keeping on attacking those low of the day, high of the day breakouts, and they just simply don't work. But they get so stubborn with it that they've spent so much time and energy learning high of the day breakouts or low of the day shorts that they just kind of keep on doing it. In trading, you got to be flexible and you got to be willing to say, hey, this didn't work. Or this doesn't work. We built up a sample size. This doesn't work. I'm going to move on to something else. Hey, we built up a sample size here. This doesn't work. I'm going to move on to something else. And a lot of strategies will work if you find the right symbols, the right conditions. But that's not easy to do either. So, there's a lot of back testing you have to do to figure it out. But I think the reason low of the day shorts like this don't work is because people start taking profit. So like, okay, we got this low of the day right here. What are experienced traders doing a lot of the time? Experienced traders are a lot of the time taking profit at these levels. They're looking at this range, and long traders are taking profit at the top, short traders are taking profit at the bottom. And so that's going to cause these small little bounces. Now, again, sometimes what I attack is I look for that little bounce, and then we look for another retest of it until it bounces back or whatever, and just kind of covering around this range here. But with that in mind, it makes high of the day breakouts and low of the day shorts kind of risky because experienced traders take profit around those levels, and so they're just going to bounce back a lot of the time and fake them out and then rinse and repeat that. And so if you keep attacking low of the day breakouts, you're going to get faked out a ton. The risk reward is going to be bad too most of the time. Yeah, good old trend lines are the most powerful, I think, for sure, Daphne. I think in terms of like trend lines are the easiest way to make money. They're the biggest edge, I think. All right, Chad, we got 10 minutes. Dollar General. Yeah, I think Dollar General is going to be in trouble. The reason for it is because I think most brick and mortar retail stores are getting in trouble. And I think mail order shipping has gotten so efficient that over time, these stores are going to fade out. The only places these stores really succeed are like small towns. But I think with newer generations and mail order shipping becoming better and better and more efficient, I think companies like Dollar General they're on their way out. I think in 20 years they're not going to be around. People are not going to need them. You're going to be able to order things so efficiently online that a lot of these brick and mortar retails are just going to struggle, most likely. So I'm not going to invest in them. But they're up on earnings. So, I mean, listen, I'm not shorting them either. I hope you do well if you're in it. I always use extended hours as well because ignoring the extended hours data I think is a mistake. This is an election year as well, and so this should be chaotic, man. Hopefully the markets do well this year. Typically markets tend to do better on election years as well. So we got 7 minutes, chat, into the market open. We're finally testing the lows here. Let's see if we continue to break down. It does look like a bear flag. The problem, though, is that we gotta wait till the open to get the real action here. All of this could be making up or down from the opening bell. Gold bouncing back a little bit, too. I think let's look at this and see if it holds into resistance here. Yeah, I can't even get mad at them. Pawn says Dollar General is running most stores 3 to 4 employees max. Stores are never organized. They put in automatic checkers. Everyone I go into, it looks like a tornado came through. And I can't even get mad at them, though. They got to save money in margins. Like, relative to the amount of business they get, I'm sure they are, I'm sure they're trying to save money any way they can. I was going to short this. I'm just going to wait for the opening bell. But yeah, I'm sure they don't have the buying power to hire a bunch of people, I'm sure. All right, chat. Hey, we got a couple minutes left until market opens. You guys ready? Yeah, I mean, I haven't been to a Dollar General in years. Google bounced it up a little bit still. I'm green on the day, mostly from SOUN and Apple. Google also doing well. Nike's up some today too. Microsoft's up. Snapchat's still green. Yeah, I bought Snow, but I'm holding like a very small position here where we're basically flat. All right, chat, here we go. 3 minutes here. Yeah, see, now we're bouncing back up in this. Same thing. So look, it broke lows of the day twice. What did it do? Each time it bounced right up. I kind of want to short because we're hitting this trend line here, but still, I don't know. I don't think the edge is very high right now. I think it's more probable that we're in a downward trend like this. I think this is the most probable downward trend, especially if we put on like a longer term chart. But I might be wrong here. We're just kind of speculating. We'll see what happens. We're moving up a lot. Market opens in 2.5 minutes. We're talking about the stock market, King. We're talking about the stock market. The countdown is for PPI. You're probably a little bit behind on the stream. PPI dropped at 8:30. It's almost 9:30 now. Google getting ready to test highs again. Google up to 142.20s. May your wishes and dreams come true today. Hey, you guys as well. I appreciate the love. All right, chat. We got about 1,000 people still hanging out with us towards the opening bell. We're going to be day trading futures at the opening bell and watching stocks and potentially day trading them also here. We got less than a minute before the market opens here, chat. So again, hit that live button, hit the subscribe button. Again, thank you guys so much. We broke 130,000 subscribers this week. So thank you guys so much. I appreciate the love. Y'all hit that sub button, hit the notification bell. My channel's growing by almost 500,000 views a month. We're growing by almost 6,000 subscribers a month. So thank you guys so much. Appreciate the love. Chat, Google broke highs of the day or getting close up there at least. We also broke over this trend line that we drew. So maybe this trend line was just wrong. 20 seconds, guys. 20 seconds. The SpaceX launch was successful. Well, Tesla's all the way back down to where it was. All right, chat, 5 seconds here, team. 5 seconds. Good luck. Let's try to make money today. We'll see. All right, ding, ding, ding. There's the opening bell here, chat. We'll see if we flush down. If we do, we might look at this trend instead. Yeah. Not a bad little trend line forming here. We'll wait and see if it plays out. All right, Nvidia flushing down at the opening bell. That's what's dragging the market down. Gold's not really moving up that much. Again, the Nasdaq 100, which is what we're trading here. Tesla back up to green on the day here. Wow. Disney back up some too. I'm gonna buy this. We're gonna try to add if we dip some more. Maybe up to 4 contracts here. We got a cushion on the day, so we're just trying to play with that cushion now. Take half off there. Maybe add it right back if we dip more. There we go. Take a little bit more off. Alright, so there's 2 contracts here we're in. This is struggling too much. I'm going to cut half of it. I'm going to add to this now. Sorry, chat. You kind of see me scalping these moves. Nvidia's right at the highs of the day here. That's a big flush. I got to cut it. Depends on what Nvidia does. Nvidia's opened up really sideways. But we will buy this again too. We're at the bottom range, so I'm trying to buy this. Give it time to work. But I also got to keep it a steady eye on Nvidia here. We cut half of it there, protected us. We got to watch Nvidia though. If Nvidia starts to slump, this could drag everything else down with us, which I don't necessarily want to get caught in. I'm going to cut this. I just don't trust it. So yeah, we're up on the day. I see Nvidia start to slump. I don't like that. That might drag the market down with us too. Although Tesla's doing pretty good. Gold's doing pretty, or Google's doing pretty good as well. Tesla's right at the lows though. We'll see how it responds. Oh, there's back up. So the trend's holding here, guys. But Nvidia, look at Nvidia run. So I should have held. But Nvidia's over 900. That's a very optimistic sign. We're still in this trend, though. We break the trend, we'll buy a small pullback if we can afterwards. This is very bullish for markets right now, though. We'll start small. We got a little dip afterwards. We'll give it a second. So we're going to try to get it up to 4 contracts here. There's 4. Right at the resistance level, but it's alright. We built up a cushion on the day that we're trying to swing into. Trying to get up there. I'm going to take half of it off just to protect the trade, and it looks like it was a good move. Just took too long to break. I could let the last two hold, and it's not going to take much back. I just don't want to give it too much time. Gold is dumping down though. Look at gold fall. Yeah, I mean, I'm not perfect. My trend line was working though. We'll see what the S&P 500 chart will give us. There we go. Green. Took half off. We'll let the rest ride. We added a little bit to this. Looks like it was the right move. You see, I'm very careful with my risk levels here. I don't want to risk too much and end up giving it all back to the market, so I don't mind taking a piece off. We're gonna go ahead and lock the rest in. We're up almost 100 on the day. We got the trend line break, which is what we were looking for. We got a little scared out, so we lowered our size. So we could have made more, but we're still green, and we'll take it. Nvidia is what's leading the market, though. It's over 900. It's up to 905s. This is up too much. I don't want to buy this, although it could run. I need to pull back to buy it. We are scalping the regular E-mini S&P, which is moving a little bit better to this. We'll get out the rest of this one, break even. I'm gonna cut it. So yeah, not too shabby. Again, you can see my P&L on the day. I'm trying to build up a cushion. We'll take larger risks. My win-loss ratio is 3.3 to 1. And so we're doing good accuracy-wise. See what Nvidia does here. Nvidia's right at that trend line though. Take a couple contracts here, although this is a quick fall. Took half off, locked it in. Took the rest off, locked that in. Looks like, I think Nvidia might bounce at 900. If it does, that'll pop this back up, but I might be wrong. Don't copy me. 900 just seems like such a big psych level that, like, you know, could have some edge there, but we'll see. Yeah, you can see my P&L on the day so far. We're up 115, 4.3 to 1 win-loss ratio. Nvidia didn't bounce at 900. I thought it might. It's approaching the 200 EMA VWAP level though. So this is a make it or break it level for the trend right now in the market and Nvidia. If Nvidia can't hold here at the 200 EMA volume weighted average price, two very big milestone levels. It didn't hold at 900 so far. It broke under 900. That's the first big milestone level. It just broke underneath. But the VWAP is right here. And so if it can bounce here, it still can maintain that trend. If it can't, you know, we might see a trend change in markets. All right, so again, make it or break it level for markets here. Nvidia's still here, so nothing happened. It's still over that 200 EMA. The volume weighted average price level's right here. 200 EMA's right here, so it's still there. So it has a big influence over markets also. So again, we're still battling that level in my opinion. It could still bounce back up, but I'm not saying it's going to. I don't know. Market's looking weak outside of this though. Mostly due to Tesla cracking under lows of market hours. Let's wait though here. Again, look at Nvidia, still at 900, trying to bounce up, it looks like. Where's Apple? Apple's green. Yeah, so again, here goes Nvidia bouncing at the VWAP there, and then there's the market bouncing up with it. So look, there's Nvidia over 900 again, there's the market bouncing. And then there's Nvidia faking everybody out, break it down. So Nvidia's under the VWAP right now. Let's watch the 200 EMA. Yeah, I don't know what's gonna happen. Hey, congrats, Akram. We're watching Nvidia. Nvidia has one of the heaviest influences over markets. So we're watching Nvidia to see where the Nasdaq's potentially gonna go. It's not an exact science by any means though, so don't copy me. But we're at a very big milestone bounce level for Nvidia. So if it bounces, it could drag the Nasdaq up with it. If it breaks down, it could drag the Nasdaq down with it. All right, we're gonna short now, although because Nvidia just flushed underneath both of those levels in a big margin. So we're gonna keep shorting here. All right, we took off half there to lock in some profit at the bottom. All right, so we just made another $30 or so. Here's the P&L right now. Again, you could see how I use the Nasdaq and Nvidia as a gauge. Look at the big break under this milestone level we've been talking about. So it finally cracked it. And look at this huge candle down here, right? And so that big candle is probably going to drag the Nasdaq down with it. That's how we're able to see this move coming. There's a lag. You can see there's a little bit of a lag. So we could watch Nvidia, wait for Nvidia to break down big with a really big red candle, and then piggyback off of it on the Nasdaq is what we just did. I hope that makes sense, you know. I don't know about rate hikes. I think we're not going to raise rates this month for sure. Yeah, and there's Nvidia breaking down, and there's the Nasdaq following it. You know, we could have a longer term trend here too. I mean, it's just from Nvidia breaking down. Like, that's why the market's breaking down now. When's what coming out again? The rate hike next Wednesday. Whereupon, you might be delayed on stream. Alright, so there's the flush, mostly dragged by Nvidia breaking. It drops monthly, once a month, Cobra. And again, if you want to day trade like I'm doing, again, it looks like it's very similar to day trading stocks. Try the futures market out. Apex is a sponsor of mine, and so you can check them out here. Or check out the link in the description. Again, use promo code BT, beginner trading, B, Bravo, T, Tom, BT, beginner trading. You get the max discount. Right now it's 80% and a one-day pass. So 80% and a one-day pass for Apex right now. Again, I'm day trading the Nasdaq 100, essentially the QQQ in futures. Apex is a funded program. They give you a demo, test your skill. Base one's only $30 if you use my link. If you pass it, you get 25K in funding. The top one's 300K. That's the one I'm trading on. I got 300K in funding with them. So 90% split. Great way to learn day trading with limited risk. If you lose, it's not the end of the world. Again, I'm biased because they pay me money. They're a sponsor of mine. I'm biased, of course, but if you want to check them out, there's the link. Appreciate the love. Thanks so much. Look at this breakdown happening in markets. Alright, so we got a big breakdown. I'm not really biased to either direction right now. I think we're down too much for me to short it. We're too weak looking for me to go long. Yeah, so here's today and yesterday's trading for me on this account. So here's today's and yesterday's trading for me on my 300K one. Man, what a breakdown though, team. Market's turning. Again, this mostly is from Tesla. Man, what a big move here, Chad. Big turn. Yeah, I'm gonna tell you guys this. Be respectful. If I hear any even like questionable comments, regarding like people, you're gonna get banned in here. Alright, so a small little bounce back up in Nvidia. Again, this dump is mostly from Nvidia. I mean, this isn't a crash, guys. I mean, it might look big because I'm short-term day trading. I can zoom out. Like, it's a dip for sure, but it's not a crash by any means. It's mostly just from Nvidia breaking down under 880s. Apple bouncing back up almost to 173s. Yeah, a lot of people, I'm sure, struggling from this. Also, if you want to help support your boy here, we got one other sponsor that I'm going to plug here. Interesting market dynamic signals here too. Kind of checking these out for the first time. All right, so again, we're starting to stagnate a little bit for Nvidia on the sideways action. Like, check these out, guys. I always tell people to check out these indicators because they're powerful. Look at the strong ones. Like, look at the strong signals. This is a Chart Prime Trading View indicator service you can use in stocks, crypto, forex, futures. There's so many indicators here, but check out the strong ones where it says strong. Look, strong buy signal, beautiful bounce. Strong sell signal there, beautiful breakdown. Strong buy signal here. This is a 5-minute chart, so this is like 5, 10, 15, 20, 25. This is like an hour and a half of price action. Strong buy signal here. Look at the beautiful rip. Look at the strong sell signal here. Beautiful drop. This strong signal worked as well. Beautiful bounce. I can't guarantee it's going to work. Nobody can, of course. But like, you can kind of see how powerful this can be. This one you could probably call wrong. This one I think worked as well, but maybe you could call it wrong as well. Bounce, bounce, dip, rip, bounce, bounce. Again, look at this sell signal. Literally called this huge drop. So I can't fake this. I can't guarantee you're going to make money with it either. I also can't fake it. Just genuinely impressive, right? Genuinely impressive. Let's look at something like Tesla. I wonder how well it's going to work on something like Tesla. Like actual stocks. I've never actually tried it on stocks before. And you can use this on any time frame, anything with a symbol on TradingView. You could try it. And I think the big edge with this is, like, I think if you use it right at the opening bell, it's going to be kind of tough to get right? So I think if you avoid this and you take longer term trends, right? I think when you got this much consolidation, it's going to be hard to work. You got to wait for the edge to play out a little bit more. Like, look, Strong signal, beautiful breakdown. Strong signal, beautiful breakdown. Strong signal, beautiful breakdown. Strong signal, beautiful breakdown. This one worked. This one didn't work. And so that's Tesla. Let's look at the SPY. Just to test it. And this is just a small piece of what they offer. They offer back testers, oscillators. Like, look, you can see all this different stuff. Screeners. A lot of really cool stuff. So this one was wrong. Look at this sell signal. Beautiful drop. This strong signal was wrong. This one might have been wrong too. But beautiful bounce on the buy signal. This one definitely dropped. Look at that strong sell signal here and then a huge breakdown. Strong signal there worked. This one worked. This one worked. This one worked. This one I think worked. I might be wrong though. Y'all check it yourself. Look at the strong signal. Boom. Boom. Strong signal. Boom. Strong signal. Boom. So again, it's genuinely impressive. Any time frame, an hourly time frame. Let's try an hourly. I tried this the other day on an hourly and it looked really powerful, to be honest. So this is an hourly. Look at this, bro. Honestly, so again, they're not going to happen every day, and you can program TradingView to send you a text message or an email when these signals show up, right? So look at the sell signal here. Days of red action. Buy signal here. Days of bullish action. Again, that's pretty impressive. I can't even fake that. It's like 40 bucks a month if you use my link. Great way to help support the channel here. Again, I can't guarantee you're going to make money. Nobody can. They're a sponsor. I'm biased. But I think that's pretty impressive. And for 40 bucks a month or whatever it is, it's pretty cheap too. I'm using the market Oracle and the market dynamics is what I use. All right, so we're bouncing back up a little bit here. No, I trade on a 1 minute, 5 minute, hourly, 15-minute chart. You have to be on the right time frame chart. Yeah. Build-A-Bear earnings are strong. I saw Build-A-Bear in the mall. What's Build-A-Bear? How is like, I'm surprised BBW is still around, man. But crazy good earnings. Up 20% from earnings, up from 25 to 30. Build-A-Bear's had a great year too. Shocking. I'm not sure, David, it's proprietary. I can't say. It's Chart Prime. Link is in the description. I can't guarantee you're going to make money. Again, check it yourself, back test it yourself, figure out what it works on and what you like using it on. Because I have 4 monitors. BH. He says, why don't we ever see you use it? Because I have 4 monitors, bro. I got so much stuff going on in the background that I got to condense my stream to one screen, but I have 4 monitors. Y'all see a 34-inch ultra wide at the top. I've got another 34-inch ultra wide underneath you that I manage the stream. I've got charts on my right and charts on my left. And so, I mean, you're not going to see me use it. I can't give it away for free, number one. They're a sponsor. I admit my bias 100%. Like, look, I'm biased. They pay me money. But y'all wouldn't be able to see me use it. Like, again, I'm on other screens. Yeah, I've done Build-A-Bear when my kids were little. I'm just surprised they're still around. I would assume something like that wouldn't be around anymore. But, you know, hey. All right, I'll be right back, guys. I'm going to go to the restroom. While I'm gone, does the market rebound today? Does the market rebound today? I'll be back. All right, we're back. Market's still pretty sideways and boring right now. Does the market rebound? Market Oracle indicator for Chart Prime, Scott, is what I'm using. The Market Oracle. Yeah, Spencer's Gifts is still around. Those gag stores are okay, but kids will always like those stores. I remember liking them as a kid. My daughter likes the stores now as a teenager. You know, that's kind of how it goes. Starting to bounce back a little bit. I'm going to short a little bit here. We're going to try to get into maybe 3 to 4 contracts. All right, we just took half off just to protect it. We kind of, what you'll see me do a lot is we'll take profit very quickly. And that way, if it turns on me, my risk is limited and we're kind of flat. And then we'll let the last contract that I hold work a little bit more. I'm going to cut this. This is pushing up too much. So yeah, we're still up a pretty big amount in this account. I'll take it. Yeah, I mean, I grew up on Pokemon cards. Was my thing. Like, I'm a big Pokemon card, like, kid. I used to sit at the bus stop and slang Pokemon cards with my friends. Now my son's into them too, so it's something that we can kind of do together. I'm trying to think of a business to build around it. I've asked ChatGPT. Too bad for small caps. Just gonna have to add more for longer. Your bag holding penny stocks? Why? Yeah, I tried to tell somebody years ago that Funko Pop was not a good investment long term because trends change. Again, you got to understand. Honestly, trends change. I grew up on freaking American Eagle, and those stores are like ghost towns now. Abercrombie is still pretty empty, but bro, Abercrombie stock is up like 1,000%. I still don't know. I still don't know what's going on with Abercrombie shares. I looked at the store. It's not. It used to be like super preppy. They've kind of pivoted to the other side where they're super, like, I don't even know. PacSun used to be like video games and like surfing clothes. Now PacSun is trendy, and Abercrombie and Fitch used to be trendy and preppy, and now Abercrombie and Fitch is kind of like the opposite. You know, it's just weird. It's weird. But anyways, the point is trends change. Clothing brands change. What younger generations find cool changes. You know, so like Funko Pops and collectibles, while I'm not saying they're not going to go up long term, there's risks. I grew up in the Beanie Baby fever of the 90s. You know, like Beanie Baby fever was a real freaking thing. Everybody loved Beanie Babies. Most of them are worth nothing now. And again, that bubble bursts. And so Funko Pops is at risk for stuff like that. Trends change, I guess is the point, you know. No, I don't remember that one. Italian Laguna. Yeah, I grew up on those N64 wrestling games, WCW, WWF wrestling games, man. Those were the... I grew up, when I was in like 5th grade, I was into wrestling. 4th grade, 3rd grade, Stone Cold Steve Austin, wrestling, I was into it. You know, I even went to like one of the live events. Once I grew up past like 12, though, I stopped watching it. No offense if you still watch it, but after a certain point, it's just cringy now. I think people watch it for nostalgia purposes, which I'm not against that. You know, do your thing, live your life. Apple completely flat on the day too. So I mean, again, like the market broke down a little bit, but it's kind of stagnated a little bit now too. I watched Dragon Ball Z. I don't watch it anymore, really, but I watched it. I watched it a lot. I watched that and Pokemon as a kid a lot. It's about the closest to anime I got. All right, Nvidia started to bounce. You can see the Nasdaq starting to bounce. Again, people wonder why you should be day trading futures. Again, if you want to day trade Nvidia with no PDT rule, look at Nvidia and then look at the Nasdaq. They look very similar to each other. Big breakdown, consolidation, bounce. Big breakdown, consolidation, bounce. Same freaking thing. You could day trade this left side on Apex, no PDT rule. They give you a demo, test your skill, you pass it, all that good stuff. Check out the link. They're a sponsor. I'm biased. Don't get mad. I'll probably close it down, guys. So y'all be good. I'll see you guys later. If you do use my sponsors, BT, Beginner Trading, BT. Use that symbol. It'll get you the max discount. Apple's starting to push up a little bit. Links for all of them are in the description. We've been having some fun with these as well lately, chat. My son just sold one of his 2016 Pokemon cards for over 200. Honestly, I had a first edition holographic Charizard as a child. First edition holographic Charizard as a child. And I lost them all. I don't know what happened to them. But I had a bunch of cards, bro. I had Charizard, Gyarados, I had freaking Mew. I had all those valuable cards that are like, some of them are worth hundreds of thousands. I had them too. But again, this is when I was like 10. So this was decades and decades ago. They probably had scuffs. They probably weren't perfect. They probably were all beat up, you know. And that's life. Listen, you know. I live a very blessed life. I can't get mad at myself, you know. I really do. Like, I live a very fulfilling, blessed life. I got a beautiful wife and kids, you know. Live a good life. Can sit here, earn a good living talking about the stock market and markets for a few hours every day. Gotta just be grateful for what you got. And, yeah, it's all good. Y'all be safe, guys. I'm gonna get out of here. Remember, tomorrow is triple witching day, chat. So tomorrow is triple witching day. It's a day of historical volatility in which all major contract types expire. This includes, again, remember, chat, this includes index options, stock options, and index futures, right? So quad witch tomorrow, or triple witching day tomorrow. There's no such thing as stock futures anymore, single stock futures, but again, triple witching day tomorrow. Y'all be ready. Yeah, I grew up on Michael Jordan. I saw Space Jam in theaters when it came out. Like that was, I had a poster of Michael Jordan on my wall. That and like I think I had like a, man, I had a picture of Michael Jordan doing the you know, the spaceman dunk, as well as man, what did I have, dude? What's the supercar from the 90s that has like it's like a roadster? I want to say they recently sold themselves to something else. I can't remember what it's called. It's like the front wheel axle is like, I don't know. A Lotus. Yeah, a Lotus is what it was. Thank you, sir. Or no, maybe it wasn't a Lotus. Was it a Prowler? Hold on. It was a Prowler. I'm sorry. It was a Prowler. It was this right here. Yeah, this is what it was. It was a Prowler. Sorry. I'm pretty sure it was a Prowler. I had something like that on my wall. Yeah. All right, chat. I'm out of here. Y'all be good. I'll see you guys later. Apple breaking highs. Nvidia still bouncing back a little bit. We're basically flat from PPI. Not a shock. The data was kind of flat and neutral. But yeah, y'all be good. I'll see you guys tomorrow. Bright and early. Later, chat.